I only trade 1 4-hour candle a day and still manage to make over $500 a day. And it's all thanks to my number one continuation model that allows me to never miss a move, and my reversal model that lets me trade even in choppy markets. Now, this system alone, I've maintained an 84% win rate and passed multiple profit accounts, and this doesn't matter if you're trading forex, futures, or stocks, because this is an engineered move the market must make every single session without fail. And it all comes down to one single candlestick. No complicated indicators, no random guessing for your bias, just simple and repeatable market direction you can follow every single day. And this is all backed by 6 years and 87,000 candlesticks studied. This is the candle I will trade for the rest of my life, and this is the same candlestick that quit my 9 to 5. And today, I'm giving you all of it for completely free. My students are not going to be happy about this. What I'm about to give you, people will charge anywhere from $3,000 to $10,000 for this information, some even more. And depending on how my inner team takes this, I may have to delete this video. So watch it while it's still here. But if I had this exact framework when I started, I would have been profitable in under a year. Instead, it took me 6 years of losses, 6 years of regrets, and 6 years of just starting over, just to arrive at something this simple. And that ends today with you. Now, this is going to be a long video because I'm giving you everything. There is no upsell. There is no part 2 behind a paywall. This is the complete system, start to finish in one sitting. And I'm guaranteeing you, if you watch this video from the start all the way to the end, you will go from feeling stuck and lost in your trading to being a trader who pulls money out the market on demand. And at the end of all of this, I'm going to be taking live trades with you on the same exact candlestick I'm about to teach. Now, this candle and this move has been studied over 1,000 trades just for me to give you this single candlestick that got me results just like this. Now, it was not always like this. In the beginning, I was stuck and confused between the SMC and ICT knowledge. I had everything noted down, all the models, all the POIs, all the liquidation that price could do, but it still was resulting me in a win rate that was not allowing me to trade at the highest level. And in the beginning, I would blame it on psychology or my risk management, but the problem was my strategy was too complicated for me to even follow it. Even though I had all the knowledge, it never converted into an executable winning trade or winning month or a year-to-year reliable system I could use. So that's why I cut out all of these confirmations and dumbed it down to a single 4-hour candle. Now, why the 4-hour candlestick? Well, simply, this was the only candlestick I could trade. Before, I was trying to enter trades in between my work breaks, or I would end up staying the entire night watching the charts just to enter one position and have it take me out by the time I clock in the office. So that's why I converted all my trading into a single 4-hour candle that allowed me to be in the market in 5 minutes and then out in the next 10 to 20 minutes. That way I could actually focus on escaping my job and actually spending time with my family to now I can build a reliable system that I'm solely using for my income. Now, there are 6 4-hour candlesticks that rotate within a given day. There is your 1 AM candle, your 5 AM candlestick, which I personally trade every single morning, the 9 AM candle, and then the 1 PM, 5 PM, and 9 PM. Now, these times are exclusive to Owander charts when you're using the Eastern Standard Time Zone or UTC-5 or UTC-4 if there is daylight savings. Now, if you're trading this on futures and not forex, you would then want to be using the CME charts, which then show you the 2 AM, the 6 AM, and the 10 AM, which is the only ones you could actually see on your chart, as well as the 2 PM, 6 PM, and 10 PM. Once again, still in the Eastern Standard Time Zone. If you're using this on crypto, such as BTC, Ethereum, or anything else, you're then focusing on the 3, 7, and 11. And if you're focusing on stocks, the exact candle I trade, which is the 5 AM, we translate it into the 130 candlestick on stocks. Understand that knowing ICT does not equal you having a system. It's just a bunch of knowledge plastered onto your screen on market open, and you don't really know which levels or which liquidity levels price is going to use for the day. That is why I've created the KISS model, which includes my two main strategy archetypes. Keep it stupid simple. Now, even this advice was given to us by Warren Buffett. So if you think that the greatest investor in the market is trying to keep it simple, and you want to have the complexity in a already complex market, you're already shooting yourself in the foot. So I have two main strategies for two types of markets: the continuations or impulse markets, which will rely on my candle impulse theory, CIT. And then I have a strategy for the ranging markets, where we're starting to see lower conditions, where there's indecisiveness in the market on a larger time frame. I will then opt in for the candle range theory. I do not trade one, I trade both, and these are the only playbooks I use. Any more would be adding nonsense to a already perfect or good enough system. Now I'll be going into in-depth understanding into both of these models. So by the end of this video, you can go take a trade profitably using either or. Now, the 1 4-hour candle masterclass. This is hours of information that people will charge for. So I'm going to give you guys exactly what you will learn in this course. You will learn how to read a candlestick just like the institutions in those major hedge funds that you think are against you. I will then teach you how to identify a trending day versus a ranging days for the people who get confused on which model to use. I'll then show you the novobox framework, which will be on how you want to be positioning yourself for those impulsive days. I will then go in depthly in on the candle range theory for the ranging markets. Like right now, we are following one of the most low conditions, slow moving times of the NASDAQ. And that is the model I'm using frequently to get winning trades day after day. I'll then go into the candle impulse theory, which is allowing you to trade in impulsive markets, like how gold is spiraling right now. That will show you how to catch the next move without having to FOMO in. Finally, I will then give you checklists on both models so you can have it side by side to your chart, so you're having a mechanical system that you can actionably use the next trading day. I'm not giving you guys more information. I'm giving you guys tips, not even tips, but the exact steps to getting a winning trade, to getting your first winning month, to getting your first payout, just like all my other students. Now, we'll then go into the IRS model, and this has nothing to do with the tax man, but it is a very important entry model to get in before the institutions start howling down on you. Now, this is mainly on the 5-minute time frame or lower. We'll then go into the time frame alignment on how to relate your higher time frame to your lower time frame with cutting the fluff. So you won't be going through the weekly, the daily, the hourly, the 30-minute, the 15. I'm giving you guys two main time frames, and you can interchange between the two depending on the day. And then finally, the last piece of the puzzle, which is volume, we will then have the auction market theory behind the entire candlestick. So you can actually tell who is giving in all these orders to have us have this massive green candle here. And then finally, I'll go over some live executions I've taken with my students in the free webinar, all the wins and the losses, so you get both sides of the coins. Once again, this is just the game that we play. So I want to show you guys what goes wrong and how we adapt in those situations. Now, on the first chapter, candle anatomy, how the candle is created. Now, firstly, there is a key understanding that you must inherit. Every candle is simply a lower time frame range. I want you to write that down. Now, what does this mean? This candlestick is simply a representation of price action that has expanded over a given time span. So for our candle, that will be from 5 to 9. 4 hours of market data is being displayed to us. Now, in terms of simplicity, we don't want to just be displaying these random bullish and bearish candlesticks. So we simplify it into a single 4-hour candle, which comprises of a open, low, high, and close. And we'll go more in depth into this. Now, what you should notice is that there are certain phases that are being transitioned throughout the life period of that candlestick. We see that in the beginning of us starting that candle, we are having a consolidation. Now, in ICT terms, this would be called your accumulation. This is simply where all the market orders are now deciding on where they want price to go for the next 4 hours. You then have the wick slash manipulation move, which is simply the fake move to get people in on one side and then take them out when they start to reverse the market. This is that engineered liquidity, and I will still go in depth on this a bit more. And then finally, you have your distribution, which makes up the bulk of that candlestick. So we had a very strong bullish move here, which related to us having a very strong bullish candle. Once again, this is just a representation of lower time frame data into a higher time frame view. Now, as you can see, once price finally closed off at the 9 o'clock hour, we get this last point. Now, as you can see, our close for our 4-hour candlestick is related to the close of the last bearish candle of the hour. You will also notice that the open of our 4-hour candle relates to the open of the first candlestick that opened at the start of the 9 o'clock hour. Okay. Now this relates to any time frame alignment. If you're speaking about maybe the daily to the 15-minute, this would apply in that scaling point, or even the weekly to the hourly. That would also apply to the scaling point. But for us, the main one we focus on is the 4-hour to the 5-minute scale ratio. And then our final point is the exhaust, where price once again is just finishing off and closing off for the day. Now that you understand how the candlestick is formed, it's important to not master your bias, because I can give you the strategy, but if you're not on the right side of the market, you will get taken out. The key is understanding the candle behavior. Now, environment one is your impulsive day. Price opens bearish. This is once again that fake move to draw in the sellers into believing that we're gonna be selling for the day. We then wipe them out by reversing the market impulsively to the opposing side. So everyone who's selling here has gotten taken out, and now we're seeing the real market makers and all the big institutions really putting in their orders. This is where you want to be having a majority of your move happening. We then finally start to exhaust when price starts to close off, losing that momentum, and then that would then leave off the tapering of a wick, showing the fallen glory of that bullish portion, as well as the lower shadow showing the former glory of that bearish movement. Once again, every story within those 4 hours is displayed on this simple candle view. That is why I say that a single candlestick is going to make you profitable. A single candlestick is all you need. It shows you everything you need. It's what you learned when you got into trading. It's what you tried to over optimize. And I'm simply bringing you back to the roots that will take you to where you want to be. Now, what does this tell us? This entire candlestick just simply tells us that the buyers are being prioritized in this market. And this indicates that there is bullish incentive. Simple. Now, with this type of movement, we are also displayed with some different market types that you might see. There is the bar chart that the candlestick is also being related to. So once again, this just shows the open, close, and the high and the low, which then relates to a line chart, which would be price slowly accumulating, then manipulating, strong distribution, exhausting, and closing off with low volatility. But the main commonality is this all led to a positive gradient, which led to a bullish candle. And I want to make it extremely important that you understand this, because if you understand price went through a positive gradient within those last 4 hours for that 4-hour candlestick to form, you want to be expecting price to follow that positive gradient, giving you a bullish candlestick for the next 4 hours or even the next day. That's how I want you to completely dumb down your bias. Do not look at the swing high that was created in 2015 as a major liquidity level price could reject from, or the order block from 2020 that prices just touched. That is too much market data that is not relevant to you. If you're trading to be on the 5-minute time frame, you enter and you're in and you're out in the next 10 minutes. What does the weekly PY have anything to do with you? And that's where many traders get confused And that's why I've also dumped that out for all my students. Even when we go live, 9:30, we're in with the sweep and we're out in the next 10 minutes. Okay. So that's how you want to take your bias for a impulsive day. Now this is a bearish example. Price opens at the highs, giving the bullish people some incentive to get in. This is price engineering that liquidity. We then take them out with this massive bearish move, using them as fuel to give off this selling pressure. We then start to close off, getting closer to the end of the hour. So if this was a 4-hour candlestick, maybe going towards 8:50 or 8:40, we're getting close to the 9 o'clock close. We see that price is now showing us a bit more bullish intention, which leaves off a wick of that former glory and a wick or shadow of that former bullishness. What does this tell us? That sellers are being prioritized in this market, and this indicates bearish incentive. What does that mean for you? You want to be following that bearish incentive. Once again, keep it very simple. Keep it, in fact, stupid simple, to a point that you cannot make any dumb mistakes. Now, how does this look on different candle or chart types? The open for the top and the start of that candlestick, we then lead to the high where we had that bullishness, the low where we had the strongest amount of bearishness, and then the close, which is related to the hour. I want to make something very important. The open and the close is independent of the price. It is solely based on the time. Okay, which is also why you'll see later on in the course that I make very high regard on the time of this open and close. Okay, the highs and the lows, they make importance of the actual price action. So when I'm looking to enter a trade, I'm basing everything off a high and a low, not an open and a close, because these just depend on the hour or the time. These depend on real market data of real people's emotions coming in, what they believed was going to be a good stock for the day or a good sell for the NASDAQ. Okay. Once again, you can see this now in terms of a line format of a line chart, the most simplest one. Price slowly starting, it then gets our buyers excited, it then takes them out as your high. We then see the most on sellers, the buyers step in once again as we close off the hour, and then we lose volatility below. But what does it all mean? We have a negative gradient, meaning this is a bearish candlestick, plain and simple, and thus it's a bearish candlestick. It will lead to more bearish movement. Okay, now as you can see, in this market we have strong, consistent selling. Okay, as you can see, there are relevant volume spikes here for the points, but that's not the main focus here. I simply want to display to you that these major body candlesticks are all moving one direction, leading to, once again, the next candle being bearish, the next candle being bearish. And as you start to see the body starts to become smaller and smaller, that is when we start to get a bit of glimpses of bullishness, and then we get more bearish body, more bearish body, and we start to pick up momentum to have, once again, that very strong major body. What does this mean? The sellers are being prioritized, and you want to start to focus on that. Don't try and find the reversal here to the upside, because you'll only get burnt in the process of catching a falling knife. Now, environment 2 is our ranging days. Okay, now I'm giving this to you guys because you guys will experience it. There's many creators who only focus on the impulse days, the continuation days, but what about the days when the market starts to range? I know most of you guys are not just going to stop trading, right? So I at least want to give you guys a model you can use so you know you're at least making a logical decision and not a decision just out of boredom. Okay, this is simply what I call an indecisive candlestick, a balance between both the buyers and the sellers. No one truly knows if they want to take control, so we have confusion, since no market participant has proclaimed to be in power. With our prior example, the bullish people, since everyone was going buys, everyone else also started to scale in on those buys, and that's how you start to have that major body. Same with the sellers. They saw people selling, they got in, fearful, they started selling more and more. But this, no one knows what's going on. That's when we have our constant ranging. Okay, so these are where we have more wicks than body on either side, and the color of the candlestick does not matter. It can be a bullish candle or a bearish candle. It still incites the same confusion. Now with this, we see it's a lot more simpler for price to have our candle range theory, because within a consolidation, what happens? Price is attracted to the highs and lows. What are we doing? We're simply following the definition of a market consolidation. You go into the highs, price takes the high, then price goes to the low. Price takes a low, it goes back to the highs. That's what happens in this area right over here. With the other examples, it was price going for lows, lows, and lows in bearish examples. And for impulsive days, it was price going for highs and going for highs. Okay. Now, as you can see, this is the Apple stock. Okay. But we just had a lack of direction. Even though it kind of looks like we're bullish, look at the volume. There's simply no volume in here. Even though this isn't really important right now, I just want to show you guys just a simple demographic of it. Even though there are buyers here, it's led to another seller. There's buyers here trying to pick out the market, but then the sellers equal that out. The buyers try again, the sellers make a sharp move to show their ignition. The buyers try and come back, sellers come back. The sellers try and push the market down, the buyers come back. As you can see, no one's taking the true handles of the market on these type of days. But what you can notice is that there is constant sweeps. This high got taken, then price took out this low. This low got taken, then price took out this high. Okay, that's what you notice. Now, this is our candle impulse theory more in depthly. This is the first model where we focus on the PCC. Now, what does this entail? Our previous candle close. As you can see, in candle anatomy, we already learned that in the first module. These are where the bullish candle closes, and what you can relate to this is that this bullish candle close is directly the same level as the next candle open. That's the one link you have to those candlesticks, and it's quite literally how the market has to move. We're taking just simple engineering principles on the market and using it to our advantage. And what you notice is price will constantly, okay, close above a previous candle high in a impulsively bullish market, but then there's also a high chance that it will now exceed the high for the very next candle. Remember, positive gradient. Now your goal is to continue this trend of impulsing by getting in when price is below the candle close. Below the candle close, you're entering on the wick. Okay, right? You're entering as price is doing that manipulation. And I'll show you guys how to do this. Okay, for example, this is our first far candle of the day. Okay, here we are. So this is our first far candle of the day, and we mark out the close of this candlestick. Okay, now entertain this experiment with me. As you can see, the next far candle fully closes above this high, but what's very important is that it opened at this exact point. We do see a wick, so price did come below here, which was the bearishness trying to push price down, but they failed to do so. We now apply that same knowledge with our next candlestick. We place our line at the candlestick close. Remember, this is bullish, so it closes at the highs. And what we expect now, for price to exceed that high point, but also it will open at the exact same point. Now, why is this happening? Why does price always open at the previous candle close? Remember, it simply has to relate to the timing of the open and the close. Those are independent of price. They are simply related to the time. So to simplify this, let's look at a 1 hour chart. For a 1 hour chart, this would be 7 o'clock, this would be 8 o'clock, and this would be 9 o'clock. At 8 exactly, this candlestick has to close. And at 9 exactly, this candlestick has to open. So if they're happening at the same time with maybe just a 1 second difference, okay, maybe 8:59, right, this candle is about to close. At 9 o'clock on the dot, we will see that price is still at the same point, which is why we have this common area. If you don't get it now, don't worry, there are still live examples I'm going to show you, as well as live executions, okay? But as you can see, the main rule of fortune is that this will always usually be at the same area. So this is a point you can look to buy under and target higher and get all these clean entries without forming in, without waiting for a fair value gap that price has to retrace into, without having to wait for an order block that price will take years to return to, while you are missing out on the main move and hating yourself for it, regretting your decisions. I'm giving you guys a scapegoat, okay? That's the main point. Make your strategy so simple, it accounts for even bad psychology, it accounts even for bad risk management. Now, let's actually start to dial in and make this more specific, okay? Now, this is actual data I got from testing this on multiple charts. Okay, now this was an automated back test, but as you can see, using this simple candle impulse model, we see that we have 89% of the time on a bullish day, we see price immediately has to open at this area and it will close above the previous kind of high point. Okay, as well as on a bearish day, if price opens at the close at this point, the next one will open at this next point and it will close below here, and you will obviously catch your entry. But what's also very important is that your entries are from above the previous candle close in a bearish scenario and below in a bullish scenario. Okay, but how do we know the exact retracement level that price will return to? This is when these levels become your main guiding point, the novobox, your daily framework. Now, let me actually show you guys where to get this. It's for free on TradingView. You're going to go into the section which shows the 4 lines with a dot on your left panel. You'll then scroll all the way down and you should find the GAN area where you'll then indicate the GAN box. Make sure to favorite this. Once you have that, open up the settings, and these are the exact points I use. I use a blue color to stick to my theme of calmness. The 0 is the starting point. The 0.25 is your first zone, 0.5, 0.75 in sequential order. And then you have your 100% or 1. Write labels with a faint background so you can actually see the candlestick. And then these are just some extra time levels. Okay, so I'll give you guys a moment just to screenshot this if you want to, or as well you can add this to your chart right now. Okay, remember guys, I'm giving out this entire presentation for free on our email list. Okay, so if you want it, make sure to subscribe to that. It should be in the first link in the description. Okay, now in terms of actually drawing this, you're drawing this from the candlestick high if it is a bullish candlestick all the way to the bullish candle low. If it was a bearish candlestick, okay, you draw from the low to the high. Okay, so just remember the levels should be inversed. Okay, you will know that you have it correctly set up if your 25% is the closest one to the candle close. Okay, if it is bearish, the 25%, you will see that it will also be at the lows instead. Okay, now this is my 4-hour candle box strategy. The upper end from the high to the 25% is our premature zone. Now, with this, you can expect price to retrace into here. Okay, I want to make something very clear. In an impulsive market, you should not be expecting price to make a deep retracement. Why? Because it's simple logic. If price creates a deep retracement, that is no more impulsive. That gives you a fair share of buyers with a sequential fair share of sellers, leading to this very slow uprising movement, which is going to be a consolidation. But in a impulsive market, it is buyers that are being prioritized. So the sellers will have a short-lived moment, touch the 25%, then we go to be bullish. The second zone is the optimum zone, which is from the 25 to the 50%. This is where you'd likely see majority of your retracements happen. Price will push, retrace into this area, and then continue pushing higher. Once again, that is normal impulsive nature, where the buying outweighs the selling by at least 7x. Okay, now once price breaks above this high, you then want to look for a rebalancing. Okay, so your first one is when we do the initial retracement. The second one is when price breaks out from the high. Okay, you should have got your first entry by here, maybe targeting this prior high point, and then your second entry will come once price once again rebalances this 4-hour box, and then you get another entry. Okay, why am I giving guys this variation? Is simply because I understood the problem with many traders. Sometimes they miss their first position and they just want to FOMO in, or they want to scale up their accounts. The main thing, greed is a human in nature behavioral system. It's what allows us to survive, and trying to override it by just quotes and seminars and audiobooks is not going to help. You want your strategy to allow you, even in those stressful situations of your emotional distress, you can still execute at a high level. Okay, so if you miss the entry, just know price will rebalance it and you'll get a second entry. Okay, now this is a bearish scenario that I was speaking of. Once again, you're drawing this from the low to the high, and then you have your 25% here, your 50% over here, and your 75%. Understanding that the danger zone is from that 75% area. Okay, I actually want to just quickly go over this. So once again, this is your overextended area. If price is within here, just know that your setup is about to be invalidated. It is no longer impulsive. If price is closed in this area, and then obviously if price reaches here, this is a complete reversal. Okay, price has not followed that bias for the day, and you simply do nothing. Okay, easy for you. Now with the bearish scenario, once price breaks out of that 4 candle box and you've already gotten your first entry, this allows you a rebalancing, so you can get a second entry to then continue targeting lower. Okay, now there are specific TP points I use exactly for that model. Okay, and these are TP points I have tried and tested them over and over. In fact, also was maybe kind of lucky, but God also allowed me to see these exact levels, and they always give a reaction to price once it breaks out of our 4 candle box. Okay, so very wise that you also do listen to that at the later on of this course. Okay, now once again, why does this make sense? It's because it's part of our lower time frame bearishness. Price is simply going down, retracing, going down more, retracing, going down more, small retrace, going down more, small retrace. You understand it now. Price continues to go down. Now, how does this look in terms of your lower time frame? Now you firstly have your 4 hour. Okay, remember that's your higher time frame alignment, and then the lower time frame would be the 5 minute. Okay, that's the relation that I use. Okay, 4 hours to 5 minute. In fact, even sometimes you'll see in the live stream, I'm directly starting on the 5 minute. Okay, because I have certain indicators that I'm allowed to see my 4 candlestick on the same time frame. Okay, but as you can see, as price is breaking out of that 4 candle range, it will slow down, come back, and hit it once again. Okay, this is our IRS model. I will still go over this, but as you can see, you want to be entering on this bullish impulse to the upside to catch in on your scaling in or your re-entry or your first entry if you did not get the first one. Okay, as you can see right there, simple model, breaks out, rebalance, continues higher. And what will then this lead to? At the end of the day, at the end of the session, it will lead to a very full-bodied 4 hour candlestick that you have perfectly traded because you used a single candlestick for your context, for your bias, for your direction, and your entry. Okay, now this is just more in depth of this. This is looking at a daily standpoint. Okay, just to make it more simplified. So for a daily candlestick, this would be obviously your Tuesday, your Wednesday, and your Thursday. And what do you notice with our Wednesday candlestick over here? We have the high, the close, the open, and the low. Price follows the AMD schematic: accumulation, manipulation, distribution, and then price slows down, exhausting once again. Now keep in mind, look at this. As you're closing off Wednesday, okay, it's reaching 11:53, 11:54, 11:59. We're slowing down, but look what's happening. Price is transitioning through the accumulation, right? And as you accumulate, bang, we start with the manipulation for the start of the Thursday candlestick, okay? Right? That's why the accumulation, even though it's overlooked, it is a very important part of the formation of a candlestick, okay? Right? It allows it to transition from one day into the other. Very rarely do you see us impulsively moving to a new day. It's usually a slow period, and then price picks up as we go into the relevant sessions for New York and Nasdaq. You'll see that Asia, London, slower. New York, we're distributing. Okay, and once again, this cycle continues throughout the day. Okay, now once again, this is your daily candlestick. You can see there your lower time for entries are happening at the wicks. Okay, so here's Wednesday candlestick. Wednesday movement, slow accumulation for the start of the day. You can see there it is midnight, 6 a.m. Very slow. Okay, we then go into 12. Okay, starting close into the afternoon session, we then see price makes this very sharp movement. Okay, wicking, impulsiveness, and then bang, we come back with sellers. What does this mean? Even though we're impulsive here, look what happens. These sellers bring the market back down. That is why I say, if we are having a deep retracement, that is not an impulsive market. This is an impulsive market because, as you can see, this bullishness outweighs the selling. Okay, but moving back to our main concept here, here's our next daily candle starting a new day. What do? We transition through a consolidation, through an accumulation, right? And then we manipulate. Okay, these lines, what are they? Our previous candle close, very correct. As you can see, the previous day transitions through that. Here's the previous candle close, transitions, okay, into the new day through this point of entry. Okay, you are buying below it. Okay, you are buying below it. We then see heavy spiral as you get into the afternoon of that day. Okay, right? And then we start to close and slow down as we get back into the midnight session. Once again, you're seeing the trend. Here is our, okay, this is not obviously drawn to scale, but just to illustrate this. But you see this is your previous candle close. We open at the same area. Okay, we dip below. We're trying to buy below that and then target high. Okay, right. One thing that the normal base AMD does not account for is the fact of that actual candle close. Okay, it's just levels based on sessions and consolidations, but it's not based on the actual formation of the candlestick. Okay, once you adopt this, and I'll show you some more techniques on how to get more precise with this, but you'll see that a lot of your AMD models or majority of your candle impulse days will be having a high win rate when you implement buying below, okay, or selling above in a bearish day. So once again, buy below the PCC, okay, then you can target the range high. You sell above the previous candle close and you target the range low. Here is a bearish example, okay? Gray is bearish for me, and you see blue is bullish for me. We have our previous candle close, and this one's actually drawn to scale. You can see this is the actual area price starts to slow down, okay? Very strong bearish day, very strong bearish candlestick. We slow down, okay? We then go above our previous candle close, okay? And you can see even this as a small wick, it still makes that little move back up, okay? And this is just to show you guys that you can still catch this, right? As long as you can understand the consistent model of it, you'll be able to catch on. So once you see that price goes above, you're looking for an entry model, which I'll show you guys, and then you enter your trade and you can target lower and lower. Obviously, there's relevant re-entries, but I'll show you guys that later on. Now, here's some times to focus on in terms of your counter impulse days, as well as your even CRT days, okay? So you want to focus on that midnight open, okay? If you're looking at this from a daily candle point view, I still recommend that you want to use it on the 4 hour, okay? And then your entry time frame for London is obviously 2 o'clock to 5 a.m. And then obviously for New York, that would then be, you guess right, 9 o'clock to 11, okay? Right, I say this, it's in between the 9:30 open, okay, to the New York PM transition. And here's some indicators you guys can go ahead and grab. So once again, screenshot this if you have to, or if you're gonna want the entire full presentation, just get it from the link in the first part of our description, okay? This is for both midnight open, and this is to get those divider lines for each and every single day, so you can for yourself test this, okay? And you get to look at it for yourself. I'm just teaching what I know, but it's not going to do you any good if you do not go apply this on your chart and prove it to yourself that this works, okay? And then you can come back and actually work with me and hop on a few calls, okay? And actually join the live sessions where we execute live every single day. But that is a very good way to test it, back test it, and just look at it from a plain market view to understand the concept. So how does this work now? With your midnight open and your 8:30 open, okay? If you are selling, you want to be above it, okay? It's the same thing with our PCC. Here's our PCC, okay? But it relates to our 8:30 open as well, okay? Right, or the midnight open, depending on the time variance you're using. But a lot of the time, you want price to be above it, so you can look to sell and then target low, okay? If you are doing the opposing side, you want to be below them, okay? So below to buy higher, okay? Let's go get a quick refill of water. I'm doing all this live for you guys, okay? This is not me just taking my previous videos and just mashing them together. This is me actually revising this with all of you, okay? Now, our entry models to use, okay? This is just a sneak peek into this. There's still a few more, but for your counter impulse theory, okay, make sure you understand the turtle soup. Okay. Now, what is the turtle soup? It's a combination of internal and external liquidity. Okay. But novobox, what does that actually mean? So take a look at our bullish leg here. So we have a predetermined bullish leg. Okay. We have impulse, retracement, and impulse. Now, even though price is still going to be bullish, it has to sweep liquidity. It's the exact same as you going on a road trip. You have one destination, but along the way, you need to make a quick gas stop to fill up. It's the same thing with the market. It runs on liquidity. So even though it's going to be going to the upside, it will make a quick brief move and take out a low point to sweep liquidity. Now, where is the liquidity at a low point? It's simply how you always trade, right? If you're looking for entry, you saw the breaker structure, you saw there's a FEG, and you enter, where would you place your stop loss? At the recent low. You wouldn't place it at the all-time low or the previous daily low. You place it at the most recent low point. So the markets are just being very efficient. Instead of using all that momentum to drive the price all the way down to the all-time low to get your little stop loss, is going to the most recent low, because that's where the accumulative of traders are being. Okay, that's where they're all placed at. That's what they're all taught to do. I'm not saying it's a bad proof of concept. I'm just saying you want to understand what's happening at that level, so you don't feel that the market is quote unquote out to get you. Okay, it's a simple game of the, on the market. You got to play by the rules. Now, at this point, once price sweeps out this internal liquidity, okay, right? It's called internal liquidity because it's part of this overall bullish trend. It will then now go for external liquidity. Now, what is external liquidity? It is the liquidity at the high. Okay, this is not directly correlated to this bullish move. It is a gamification of price going all the way down here. Okay, so this becomes like your all-time high in terms of this pricing, which it pretty much is. It is your all-time high. Okay, so price will total swoop here and go to this point. Now, how do you trade this? Let's take a look at this chart example. So price is following a bullish trend. Now in this, what we realize, we have this low order block, okay, but we have a bullish leg, a retracement, a bullish leg. Most people, when they're entering, they see that there's an order block here, right? They want to enter over here. They kind of see this bullish move, they enter their trade where they're placing their stop loss, right? Placing it over here, or at most, they're placing it at this low point, okay? But they never think of this low. They forget about it, right? And as you can see, price drives all the way down, takes you out here, maybe takes you out over here. You hate the market and you see it reversing your direction. But all you had to do is understand the concept of turtle soup. Price will take out the internal liquidity, which was this fake low, and then you are entering at the next residing area, okay? The most common point, which is going to be this all block, okay? Now, how does it relate to our kind of impulse theory? As you can see, we have our PCC, our previous candle close. At this point, you will see that the candle would go below here. As it's going below, it's sweeping our liquidity, okay, to then go higher. Here is our previous candle close on the lower time frame, but price is sweeping down, creating that liquidity before it starts to push out, okay. The second one is our MD, which we did go through, but once again, accumulation of price in the start of the session, manipulating to take out those initial people, okay, and also attract newer stock in for liquidity. We then distribute to take out that prior liquidity point from here, and then we go to the downside for the rest of the day. Once again, PCC or opening of the new candlestick, you're selling above here, and here is a chart example of this. Slow accumulation, manipulation to the highs, and then it is redistributing to the opposing side. Okay, there we go. Power 3 as well, that many people might know it as. Okay, now here we go. This is the second model of our candle impulse theory, okay, and I call this the tap and go. I was so happy when I actually discovered this. This is actually the initial way I thought of this model, okay. I'll go back on the chart and I realize something. The price, firstly, it goes above my previous candle close in a bear scenario, or first it goes below in a bullish scenario. But the common point is that price loves that 50%. It loves the equilibrium. Okay, now I'm not going to directly throw this into premium discount, but I want you guys to start to pay very close attention to this, okay? Because of the tap and go model, which is the previous candle equilibrium, price will move, okay, into the 50% of your previous candlestick, and then it'll usually leave a large standing wick, okay? All right. Why is it a large standing wick? Because it's a very fast movement away. Okay, price went bullish here and then fastly went away from that point. Okay, once again, confusion, but it is the erection from price that you want, so you can start to get part of the selling momentum here. Okay, right. What does this look on a lower time frame? Here's your previous higher time frame candlestick. This is your lower time frame movement. There's the high, there's the low of your previous 4-hour candle. You then draw out the range, 50%. What price does, it starts off, okay, obviously here's your previous candle close. Price goes above that and then reaches into the 30%, okay. Now for all these smart students in here who are actually taking notes, what does this also relate to, right? It also relates to our novobox, okay, the 25% and 50%, okay. That's why I said this was derived from, I mean, this is the main point that strategy was derived from, okay. So with our new high time candlestick, which is right here, this is the low time frame movement that price is playing, and it sharply moves to the downside, leaving that last standing wick. These are the ideal ones you want, especially on at 9:30 market open. Right? You want a very fast move once price goes to 50%, okay. And as you can see, this is just more time frame alignment. I only use 2 time frames, okay, right? I rarely ever even look at the daily, especially now my recent trading is just the 4 hour and the 5 minutes, okay. What I want to do is cut out the fluff. I want to cut out the extra steps that are between me and my entry. The more steps there are between you and your entry, the more room for error there is for you to make a mistake. There is more room for you to hesitate. There is more room for you to FOMO in. There is more room for you to mess up and get a bad entry. But the less steps, okay, the less time frames you cut out, and the more direct you are to gain from high time frame to low time frame, it allows you to also not only be more secure, but also be fast with the execution, okay? A lot of the moves we take happen within 10 to 15 minutes, okay? In and out, okay? We've seen trades go done and dusted within 2 minutes, okay? Right? But we want to have that precise precision, okay? We're doing trading to live a life where we are time free, okay, right? I know a lot of you guys probably good jobs. I've worked with surgeons, software engineers, computer analysts, you know, people in major high intensity scenarios, okay, but it's very time consuming. This gives you that gateway, but you also have to be quick enough to catch on with it, okay. So our 4 hour, get our previous candle high to low. This is just a simplified version of the GAN box. As you can see, it's just the 50%, but from the high to the low. Here is our previous candle close, okay. There's the PCE, which is the previous candle equilibrium. And what do you see? Price has this low time frame bullish range. We then slow down, bang. Where do we come to? The exact 50% of our previous 4 hour candle, okay, which then leaves us last standing wick, usually at a market open, or if you're trading anything London related, I mean, it will relate with the London market open, okay. It has to be on a London based pair. So as you can see, price goes above, you get your change state, to go over, you get your entry, and you're targeting the high, okay, right. But what you also notice is that first entry, if you're very fast, would be in like a direct limit here, which I don't really recommend. I recommend getting more feedback from the market. And then here is the re-entry, okay. You do not FOMO in, you simply wait for price to rebalance that 4 hour box. As you can see, here's our 4 hour box, price goes above, okay, once comes back here, gives you another one, wait enter, okay. Now let's actually put this all into an actionable trade plan, and that is the winning formula, which is my 2026 strategy for success, okay. Now I'm giving guys the S plus ranking. If you guys want the other rankings like the A plus, the A tier, the B tier, like I did with the CRT checklist, once again, that is in the description. I'm giving you guys all the resources, okay. I'm not gatekeeping anything from you, okay. There's nothing that I want to keep. This is not as avalanche that I wanted in the beginning. That's what I'm giving to you guys, okay, right. If my team doesn't like this, I'll just take it down, okay. But for everyone who got early, well done. So this is our impulsive for our candlesticks, okay. That's the very first thing you need on your candle impulse day, okay, for the CI team. You need to look at the last 3 to 4 4 hour candles. Realize when I say we're starting to understand bias, I'm not saying look at the high that was created 2 weeks ago, or the high that was made maybe, you know, a whole month ago, right, or the all-time highs. I'm saying the last 3 to 4 candles. This would suffice, okay, right, because I focus on the immediate trend, okay. That's my focus is literally the immediate trend. Even if I see that on the fall they'd be like this certain high here, okay, price makes a high, goes down, okay, price makes a high here, goes bearish, and then so it's going bullish. I'm not looking at this just to go down lower, okay, right, because yes, price could maybe do that later on, but right now it's showing me that it wants to go higher, okay, and I'm going to follow that, right. And these aren't like small candlesticks, these are 4 hours. So this is 4, 8, 12, okay, right. Those are big numbers. That's a full early morning day, okay. So that is still relevant data you want to use. So once again, you want to align them and make sure that they are in the same direction. So this is all bullish, bullish, bullish. Okay. And you want to make sure that they are having major bodies. Okay. It's okay with having this smaller one, but as long as you see that they are picking up momentum. Okay. And this also relates to the other model, which is the CRT into CIT, which we'll show you later on. But essentially, that price made a strip the previous low point here, grab liquidity, now it has ignition. Okay, so it's gonna want to impulse in regardless. Okay, the optimum zone once again is our 25% to our 50%. You want to see price within this area. Ideally, premature would suffice. Okay, but make sure it is in good regard. Okay, just make sure you are not buying, okay, right, or getting your entry above your PCC, okay, right. I opt in for you guys to get the PCC, okay, the previous candle close, getting and buying below there, and then you're at least targeting this as initial targets, and then you want to get more, you can have the rebalancing, okay. Either or, you should get away with it if you have already gotten the impulse candlesticks, okay. And then the additional liquidation, this is important for especially this model, which is our turtle soup, equal lows, trend lines, okay, just the basic stuff we already learned. And then finally, your entry, you want to clear CISD to get in your trade, and then obviously you want to have your key times, which is being above the midnight or 8:30 for a sell or below for a buy. Okay, this is extra. I wouldn't say it's a deal breaker if you don't have it. If you don't, as long as you have this, okay, and this and this is all levels of importance, okay, to make an S plus setup. Okay, and lastly, you do not want to have liquidity against you. Now, what does this mean? Simply means if you're buying and there's equal lows over here, okay, there's a high chance the price could actually come and take those equal lows and then go higher. Okay, if it doesn't, okay, that's okay, but I just feel more comfortable being in a position where I know I'm not going to be obviously swept out, right? If I'm swept out, at least allow it to be, let it catch me at the around the corner, you know, where I don't expect it. But if I can visually see the price has an incentive to go lower, I'm not just gonna blatantly enter because I have everything else aligned. Okay, so it's a good food for thought. Okay, so let's actually look at this in theory. So we have our 4-hour candles on the side, and this is our 5-minute time frame. Literally 2-minute time frames. I mean, literally only 2 time frames. That is our time frame alignment. I could literally be on this chart alone, and I would be good. Okay, I actually need to start using more of the 4-hour candle time frame, but this is also very good. So once you have this, you look at your 4-hour candle. It's pretty impulsive. Okay, good, check mark. Right, you have price just at the optimum zone, as you can see, just kind of tapped it again. But I would actually wait for one thing. The most important thing, also, I did not mention this, but if this is a 4-hour candle, so your 5 o'clock candle, this would be the 9 o'clock. Okay, remember it's 1, 5, and 9, or 2 o'clock, then 6 o'clock, then 10 o'clock. Remember that your openings are solely based on the time. So this dotted line is the opening of the new candlestick. Okay, and you can see it's pretty much the same level as our previous candle close. Now, this dotted line is happening because we started 9 o'clock right here. Okay, this is exactly 9 o'clock happened, right? Meaning that this retracement here, it was not part of our CIT exactly. Okay, this is still part of the previous candlestick. Any market structure that you use to enter your trade has to be based off the newer candle. Okay, so a retracement must be born of this candlestick. This candlestick is not done its full retracement yet. It is not. Okay, right? You can see right here, it's still above the PCC. I mean, above the 25%. Do you guys understand? Okay. So even though price did retrace here, this retracement was from this candlestick. Okay, you can see there's the high, then it closes right there, bang, then we open. So as you can see, here's 9-3 open. Now what happens? Price goes down. Okay, to many alike, they will see this as a CRT. Okay, and this is what I'm actually doing this video to attack that problem. My students already understand it, but for everyone who has not joined yet, this is how you attack it. You're looking at the 4-hour candles first. The lower time can be deceiving. If the 4-hour candles told you that it's impulsive day, you want to follow the impulsive days no matter what price does show. Okay, so don't look for reversals just yet. Price is just coming back into your optimal zone. This is valid. Why is it valid? because it is born of this candlestick. This retracement was born of the previous one. This is born of our current candlestick. So price is just retraced. Now this is our true retracement. Okay, so here's impulse. There is the true retracement into our optimum zone. So we can check this off. And at this point, you're looking for additional liquidity. So like a turtle soup, what do we have here? Turtle soup. Okay, strong low, internal low, external high. What else do you notice? Previous candle close. Okay, look at that. We're below the previous candle close. This is making out for a good entry. Okay, and then obviously once you get your CISD, which is this candle close here, you're immediately in. Okay, so we close the candle there, you end your trade. I usually recommend that you wait for the candle to actually close, because I mean think about it this way. Okay, you'll see this on the live executions. Okay, well, this is the fully printed out indecisive bearish candle. At one point, this candle looked very bullish, and then like the last few seconds, it completely reversed. Okay, to be bearish. And I see a lot of you guys might be doing that. Okay, you're entering because the candle looks like it's about to go, but you don't wait for those last few seconds. We can fully reverse. Okay, so that's why I always want the price to be fully done printing it, and then I know, okay, this is data I can use. Okay, so that's where we get our entry there and stop just below the low, below the 50% to be safe, and then you are targeting higher. Once again, there are specific targets I use. I'll be showing you guys later on. Okay, should I show that? I don't know. I'll see. And then finally, this is also one of the other entry models I just wanted to show you guys. This is part of the RS, the impulse, the range, the sweep, which will then lead to another impulse, range, sweep, impulse. Okay, IRS. Okay, that's our entry. Now, welcome to the ranging days. This is the market conditions that most of you will struggle in. Okay, everyone can make money on the bullish run. Okay, majority of everyone made money when Bitcoin and all crypto was going up, but where people struggled was when the markets became low volatile, when there was indecisiveness, when they were just constantly going up and down. That's why everyone avoids December. Everyone avoids December because why? It's low volume, it's consolidating, it's bad price action. Once again, these are just external motives. Okay, all it takes. I enjoy December. Okay, I enjoyed December. December was very good because there was so much ranging days and so much CRT I could trade. Okay, and this is actually one of my simpler models, in fact. So here's how you take this on. Once again, I'm preparing you guys to be prepared for any market. So once you're done with this video, you can trade in any market. Okay, so this is my 5 a.m. timed CRT. This is my go-to model. This is my bread and butter model. This is the strategy I'll trade for life. This is the candlestick I'll trade for life. This is the 4-hour candle I will use for the rest of my life. Okay, so once again, just to reiterate, you want to use this on the UTC -4 and to have the exact New York time on your chart. If it is daylight savings, okay, it will switch to UTC -5. Okay, so just make sure you check that out on TradingView. Now, with the very first part, we have the formation of the CRT. Okay, what does this entail? It's the actual 4-hour 5 a.m. candlestick. Okay, the actual candle. Okay, that's all. That is your entire liquidity level. Okay, that high is your buy side liquidity. That low is your sell side liquidity. Okay, I reiterate, it is not some subjective level that if I see it, you probably might see it, or if you see it, then the next man will see it. No, everyone who goes into their chart on TradingView will see that this high is printed at X dollar, at X amount, 256, okay, level, or at 245 ticks, they will see this as the low. Okay, and that's the reason why I like this model, because it is truly mechanical. It's not like you kind of have to be in my head to see it. No, all my students, they see the same candlestick, which is why majority of the time we have the same bias. I mean, we have also traders who trade this on Indian markets where there's a bit more of gaps, but even with gap markets, once they print out the candlestick, it will always have its high and low, which is why I can use it. With a gap, you kind of don't see that inner liquidity or stuff, but with this, you do know where to use it. Okay, then the second part is the sweep of the CRT. This we are mainly looking at on the lower time frame. Okay, so this is 4-hour, this is lower time frame. stemming from 9 a.m. to 11 a.m. Eastern Standard Time. We're looking for the sweep of your candle range, okay? And then the obvious candle impulse, which is the reversal, the distribution. And where you're targeting easy money, the opposing side of the range, and there is a few more, okay? So let's reiterate that, okay? Our first step is going on the 4-hour time frame, marking out our 5 o'clock candle high and low. We then go on the lower time frame, you wait for the sweep at 9 to 11, and then you wait, get your entry, and you target the opposing side. Now, once again, keeping it stupid simple, there are our 6 4-hour candles that we have already discussed in the beginning. Name some of them being the 1 a.m., the 5 a.m., the 9 p.m., this all being EST. But all of these are 4-hour candles. Again, this is where you start off your day. This is where you start your bias and everything. It's on the 4-hour and getting that candle. This formation creates your price range, okay? Now, understand this. All the price action contained between this 4-hour candle high and low is to be considered as liquidity that price will eventually sweep, okay? Main keyword, eventually, and sweep, meaning that you cannot be entering with any, okay? Right? If it's a CRT day, you cannot just be blindly entering any, okay? And how do you identify if it's CRT, okay? You look at the candle. Is it more wick than body? Well, last 4-hour candles showing more wick than body. Were they indecisive? Did we see bullish, then bearish, then bullish candle, then bearish candle, okay? Remember, if you forgot this, okay, go back to the first part in candle anatomy, okay? Right? Someone in the comments probably already made time chapters for this, but I urge you, please go back. Now, once price does this, you're waiting now for the sweep of the CRT. Now, this happens at different times depending on the 4-hour candle that you choose, okay? Here's where it gets a bit more specific. Now, since I use the 5 a.m. 4-hour candlestick, I'm usually waiting for my sweep at 9 a.m. EST, okay? Maybe even 9:30, okay? 9:30, a lot more. But you will never see me enter a trade before 9 o'clock. It's impossible, right? It is physically impossible for me to enter a trade before 9 o'clock if I'm using the 5 a.m. candlestick, okay? Who you understands why, okay? It's simply because the 5 o'clock candle is stemming for 4 hours. So it's your 5, your 6, your 7, your 8, and your 9, okay? Right? Obviously, it's 4 hours, but that means that this candle closes at 9 o'clock. The candle does not close at 8. It does not close at 7. It does not close at 6. You cannot use a candle that is still forming. This formation, it is already done. It's not still wicking up and down here or wavering. It is done. It is concluded, okay? So if you find yourself entering, if you find yourself using the 1 a.m. as your, apologies, if you find yourself using your 1 a.m. candle for your range, you cannot enter a trade before the 5 o'clock, okay? Why? Because the 1 a.m. candle closes at 5 o'clock, okay? So you can't enter before that. The candlestick will still be moving up and down. It'll be still defined, okay, is this the actual low? I don't want you guys to go ahead and guess, because then you guess and then you're wrong, then you point back at me, okay, when I didn't tell you to do that, right? And now, why would it be beneficial to use different 4-hour candles for certain times, okay? I chose the 5 a.m. candle because that fit my schedule the best, okay? Right? Even when I was like working or I had other activities in my life, the 5 o'clock candle led to me trading at 9 o'clock, where I was most free. And because I was most free at 9 o'clock Eastern Standard Time, I would then look for a pair that allowed me to trade at 9 o'clock, which was NASDAQ, okay, or gold, which usually move during that market open time, okay? So I urge you guys to do the same. Don't just take my exact system, okay? Even for my students, I have personalized the flip out of CRT or CIT for them, because they're all over the world, okay? Some in the UK, India, Norwegia, Panama, like different states. They don't have, sometimes they work, sometimes you just want to spend time with your kids at this hour, okay? Right? So don't just use the 5 o'clock and 9 a.m. sweep, because I use it, okay? Find one that fits you, okay? So if you find yourself you want to trade later on in the day, you are opting in for using your 9 a.m. as your range, so you can trade at 1 p.m. okay? Because that's when the 9 a.m. candle closes, okay? Right? So that's just some food for thought, okay? Now this commences the reversal phase. As you can see right there, there's a sweep and price starting to reverse. Okay, here's where you want to start getting entries and everything. Okay, and then obviously the kind of impulse. This in price now going in one direction, and it has now on that liquidity. Okay, as you can see right here, but the super high area of liquidity, it provides the market fuel. Okay, to the desired draw liquidity, which will be immediately your 4 candle high. Okay, that's literally the main one. Okay, now the certain ways to enter this are your candle impulse, which we were just mentioning before. Okay, what's happening here? Literally price is going below here, then going high. Okay, this is a bit more of a deeper wick. Okay, this is illustration, but a lot of the time it's very short. Okay, price literally goes here 50%, then impulse. Okay, and even if you miss this, remember, okay, since what we're doing now, we're impulsing, and impulse wick 50%, 25%, either or. You're entering below the previous candle close to go higher. Okay, now the dots are connecting. Now the jigsaw is being solved. Okay, and then RB stands for rejection block. Okay, simply the previous candlestick that got high, that got high and low being swept, and then using that also as a point of entry. Okay, so like this, the price comes to this high point. Here's the high and low, got swept here, low got swept here, entering on this point here. Okay, to go higher. But I just prefer CIT or CID on the low time frame. Now, let's actually go into everything based on the candle range theory, okay? Because that was just my single candlestick model, okay? This is the second model where we use 3 candlesticks again, and this really goes into AMD, okay? As you can see, literally the first candle is meant for accumulation. What do we do in that first candle range? Accumulating. Second candle manipulates, takes out the high. Second candle just pushing out and starting the reversal. The third candle goes in one direction, okay? Okay, it goes in one direction to that opposing draw liquidity, and you're entering within there, okay? Now this comes in the form of the what I call the 159 sequence. So this being your 1 AM candle, where it was mainly part of Asia, the 5 AM being part of London, and then the 9 AM being part of the New York, okay? Right? So let's dive in. Now the candle range theory is applicable on all time frames, okay? Even though our main focus today is the 4 hour, the theory itself is fractal. You can do it on the monthly, the weekly, the daily, all the way down to a literal 2 minute, a 1 minute CRT, a 15-second CRT. Okay, but why is this happening? Because on every single time frame, price needs to sweep out liquidity, and the easiest one is gonna be the previous candle's high or low. That's it. That's the market at its finest. Once again, you guys are taking simple market principles and engineering it into your own. Okay, I'm not giving you guys some subjective supply zone or the subjective demand zone or random liquidity. I'm giving you what the market is showing you. Okay, so as you can see, this is an example here. We have July candlestick making the high and low. We then see August sweep out July's high, and then if you're seeing this, your thought should be, September's probably going to be super bearish. Okay, right? It might be bullish in the beginning for that AMD. Okay, accumulation, manipulation, bullish, and then distributing. Okay, to take out that opposing July low. Okay, right? Now these are for the advanced position size traders. Okay, but if you actually look at this closer, we realize something, that in the peak of this retracement, okay, in the peak of this reversal, because the candle range theory is a reversal model, not a continuation retrace model, what you notice is that, look at this. This is our obvious July high and low that we extrapolated from this candlestick on the monthly time frame. But if you zoom into the wick of August here, we see another CRT forming. We have the 8th of August, Monday, the 15th of August, Monday, and then the next week right after, the 22nd of August, we have another CRT, another reversal. Once again, your monthly CRT encapsulated the weekly CRT. Okay, so now you should start thinking, how do I get in this earlier? You look at the weekly. But now, how do I even delve into this a lot more? Here's your weekly CRT, which is at the peak of that monthly high. It also encapsulates another CRT on the daily time frame. Monday, Tuesday, Wednesday. You guys are getting the idea, okay? And even down to the minutest one, we now use the daily CRT encapsulating a 4-hour. There's a 4 high, 4 low. This is the wick. Might not be too visible because of the line contrast here, but there's a wick here that sweeps both the 4 high and low point, and then price obviously reverses. Okay, so that's just to show you guys that everything that I'm showing you guys can be extrapolated. Okay, lower, lower, lower. Now, once again, depending on how you're looking at this, your time frame alignment has to be very important. But the one I'm teaching you guys today is the 4-hour to the 5-minute. Okay. Now, what do you notice? Okay. The entire range is based off one candle. It is the foundation. Okay. So even though it takes 3 candles to finish it, it is based on a single candlestick. Okay. I'm still keeping my promise. All you need is one candle. Okay. Trading already is complex enough. Don't make it even more complex. Okay. So the CRT high would be obviously your objective liquidity, that price on the target, as well as the CRT low being the objective liquidity. Okay. Candle range low, candle range high. Now this accumulation candle creates the range and the liquidity points. Okay. Right. Remember, this also, you can call it your CRT formation, but this is in terms of the power 3. Okay. So we then have the manipulation candle. This is the striking point where price will pivot point from. Okay, since price already swept one area of objective liquidity, it's reached its first target. It will now go for its second target, which is that low, which is then you'll see the distribution candle will seek that unfilled liquidity point, and you will now have a completed 3-stick CRT. This literally right here is all you need. Okay, what I just explained to you is the literal dynamic and engineering of the market. Okay, right? You go onto your chart right now, open up TradingView, and I want you to look at a candlestick form like this, followed by a candlestick like this, and see what happens. Price will fall down. Okay, right? For the candle impulse theory, look at a strong bullish candle followed by another strong bullish candle. What happens? Another strong bullish candle forming from a point, the PCC. Everything I teach you guys can go directly put on the chart. Okay, right? Now keep this in mind. This schematic also can happen in 2 candlesticks, okay, which we already went over, right? One where we sweep the high, and here's another one where we sweep the low. Okay, now this is what they try and hide from you. Okay, they try and distract you with all these strategies, with all these indicators, but this is the basis of the market. As you can see, this is not a normal market where you can just trade an impulse, okay, right? Or just try and opening range break out this. Like it's not gonna work. There's not enough volatility for price to just break out immensely, then continue that breakout. And most of you guys have taken loss like that. You try into here, and then bang, price goes against you. Okay, how do you aid this? With CRT. The high and the low, you understand, is the main liquidity point. What do you understand as well? The candle anatomy, the candle behavior, it is low volume. It is indecisive. There's more wick here than I see more majority body, okay? Right? Even though it's a fair amount, but you want it to be very strong body, like overwhelmingly more body than wick, which we don't have here. And you can see that lack of volatility on the lower time frame, okay? Price slow down, you sweep, we reverse, okay? Because this is now become a ranging market where its sole purpose is to go from high to low, even from low back to high, okay? Now, as you can see, there is our AMD happening, okay? So price is accumulating here, manipulating, distributing, okay? Now, the next point you want to understand are trends, okay? Not just trends, but the liquidity that are in trends, okay? So with a bearish market, all the liquidity will be lying at the highs. Like, what? Price always taking out the lows. Yeah, price is constantly taking out lows, meaning that there isn't liquidity lying there anymore, okay? There's in fact more liquidity as price keeps stacking on and protecting and creating conviction, not conviction, but a belief that price is not going to take out the highs, okay? So there's more sellers here than there's buyers over here. And in the opposing side, if you're bullish, price is constantly taking out the highs, okay? But what it creates is this unparalleled point of indiscriminate buyers just placing their stop loss here because price is going to go higher, okay? And that in itself is a very good course to take, okay? You want to be following one bias till price proves you wrong, okay? It literally has to prove to you undeniably that, okay, we're no more bullish now, okay? That's when you're gonna kind of take a hint, but don't try and predict the reverse, okay? You guys are not at that level yet, okay? Let's see, price now creates the liquidity, and what's happening within this, okay? Price now takes out liquidity, okay? So you can see right here in the bullish market, the bearish market, look at those highs, what's happening? We are total swooping it, okay? Mandatory liquidation to continue the trend. Mandatory fuel up, stopping the stage for gas to continue lower, okay? As well as this, a mandatory stop to take out liquidity at lows to continue higher, okay? Without this, price would not have the oomph, okay? It would not have the energy to transfer, okay, those contracts to keep on going higher and higher, okay? Right? But let me not say energy, but obviously money. Okay, they take your money to fuel more moves. But here's an example of this, okay? Right? This is a very slow market, so I want to show you this in terms of CRT. Even though price is moving in one direction, still very slow, but what it's doing, it's sweeping out lows, okay? Then it takes the highs, sweeps the lows to go higher, sweeps the lows to go higher, sweeps the lows to go higher. And what does it look on the lower time from here? We have price go high, creates a low, takes that low out, goes higher, creates another low, price takes it out to go higher, price gets another low, total swoop, change state to go higher, price gets another low, it takes it out to go higher, okay? So literally this is part of the CRT order flow, it's part of the flow of the market, okay? So you just ignoring this is you ignoring the flow of the market, okay? Right? Obviously, as you can see, after enough CRTs, after enough liquidations, price now finally has the liquidity and the fuel and money to now just continually go higher, okay? You can see right there, now it's CIT, it's CIT, it's CIT, okay? Just previous kind of close, wick in, buy. Previous kind of close, wick in, buy, okay? And even though they are taking out liquidity from retailers here, it's not like you guys have a major pool of the market cap, but it is also just a means of them just getting better entries, okay? Right? They can fulfill a lot of their orders a lot better, okay? Now, this also applies to bearish scenarios. You have a bearish candlestick high, price ships out and reverses in terms of 3 sticks. So here's foundation, manipulation, and distribution. We then have the foundation candle here, which creates your liquidity high and low. Price sweeps it, sweeps again, sweeps it the third time, then goes low, okay? But as you can see right here, we have what I call a CRT within a CRT here. Because you have another candle range high and low point that does get swept out within that, okay? Right, on the same time frame, not just in terms of fractality. So once price has done this, it extends lower, sweep of high to the lows, sweep of high to the lows. And as you can see that continuation trends, we now see this on the low time frame. We have this strong failed high that price sweeps out to go lower, even taking out external highs, okay? And you can see this over here as well. But we like to just focus on the most recent one, okay? I want to make this extremely simple for you guys. And here we have another one. Here's a high, price sweeps it out, okay? Takes a few times, but it does go back down. Price takes a high, very minimal, but the reverses, as you can see, here's a few more highs. The price takes out and then goes to the opposing side, okay? But now, how do you enter CRT, okay? Now, CRT, I follow a very simple process, a very simple entry formula. CID, okay, so change in state of delivery, into a break block, into an entry. I'm really giving out everything right now, okay? And then you also have your nano CR. What does this mean, okay? It's your inner CRT. Just like what you saw in the previous example, here's the main CRT, so price sweeps the high, but you have another CRT within that. This is what I call a nano CRT, okay? Inner CRT or inner CR, where since price sweeps out this high and low, it now has enough conviction and volatility to go to the downside, okay? To truly follow that next opposing side. So you can even enter on this candlestick. So this one over here, on this candle, as this one closes, you enter on that, you need to toggle low, okay? That's what I call nano CR. But here's an example of this, okay? So there's the high and low. Price sweeps out once, but no true change state here. We come in a second time. Now we have a change state of delivery, candle closure. Price comes to your breaker block, okay? Now, what is a breaker block? It is a previous order block that price is supposed to respect. So you can see right here, order block, price comes back in here. It's supposed to go bullish to continue the bullish trend, but it doesn't want to. So it disrespects that order block, okay? It is now broken, break, and then it takes out a low, and I use it as the opposing side as what we call a breaker block. Okay. Now with this, I like to get a bit more feedback. This is direct limit order, but usually what I want to do is if price gives me this bearish candle, then I'm in on this one. Okay. And then my stop is above the high. Or if price comes a bit more deeper, okay, this is why I prefer a breaker block. Even if price doesn't respect this initially and wants to go to like an order block at the highs, at the more premium, price will have to go past the breaker block again. Okay. So it's better that you are not missing entry, because that's what I saw a lot in the beginning of my trading journey when I was very heavily in SMC. I want to get in on the most premium and most refined order block, and I end up just missing the entire position. Okay. Right. You might see the same thing with your fair value gaps. If they so high up in the reversal that you even end up letting price retrace to that. Okay. Remember, this is a fast move by nature. Price does not have all the time to go all the way back up and then come back down. Give a quick move out, a quick move in, and then back out. Okay. If price does a deeper move, you simply wait for that bearish move from that area. So this candlestick would indicate my entry, not this one, but this one. Okay. Right. And there you go. Okay. I also don't recommend going break even, because you can see right here, price loved my entry so much that it had to come and visit it twice or a couple more times. Okay. And for all the legacy students, you guys already know you guys have an extra step. Okay. Which I just kind of explained there, sneak peek. And then now, how do you enter this within a CRT? Okay. So you can see here is a higher time frame CRT range high and low, which reaches range over, with a lower time frame CRT within that. Okay. So here is the inner candle high, accumulation, sweep, manipulate, and redistribute. Okay. Once that candlestick has been achieved, okay, you're simply just getting in on the candlestick that made the sweep, okay, which is this one. So bang, bang, okay, stop above the high. Okay. Now here's some important timings for your 5 AM candle. So the one that I use. Okay. So there's pre-market, which is the opening bell. This is from 8:30 to 9:30. Okay. I include 8:30 because a lot of the news that does happen, NFP, CPI, sometimes they happen. Those red folders, they happen at 8:30. Okay. Right. That's pre-market. So just be aware of that. But 9:30 open is the most important one. You see there are a lot of entries that happen exactly at 9:30. We get an exact sweep of liquidity at 9:30 open. Okay. In the US markets. So that is your NASDAQ and your ES, or your NQ and your S&P 500. Okay. For the futures. And then there is the first hour of trading, which is the opening range breakout, which is simply what I already told you guys as kind of impulse theory, CIT, or even more advanced V2. And then once again, these key times are going to be from 9:30 to 10:30. Now, especially with the daylight savings shift, okay, I'm really giving you guys a lot of source right here. Okay. Price is now shifted from 10:30, okay, to do more of those more high volatility spikes. Okay. Right. And then there's the midday consolidation, which sometimes does lead to reversal if price is not made a sweep. Okay, so if price is not swept within the morning session, okay, namely this area, it will then opt in to do a sweep within this time. So from 11 to 12 p.m. Okay, and then your PM times. Okay, you also see that if you have a double sweep there, okay, which is simply just a CRT on both sides. So price sweeps the high, then reverses, then price sweeps the low, and then reverses back up. Okay, right. That could happen once again within that midday consolidation. So just be aware of those times. For if you train a different candlestick, I'll say do some research on that. Okay. I've helped some other students with that one, but that is too much personalization for this course alone. If you guys want that, there's a free book or call link in the description. Okay. Now the 5 AM candlestick, okay, can also be once again translated into a 6 AM candle if you're looking at this on futures. But main thing is you get that far kind of high and low, and then you're waiting for a sweep. And this is right here, we actually get a sweep more close to the midday consolidation. Just to show you guys an example, but we pretty much just stay in the range and we're doing nothing. Okay, so once you get that sweep here, this is still kind of early, but now I see reversal. Where is price? Is candle closing above here, change state, break a block. Okay, so this is a bearish supply zone or bearish order block. If price wanted to go lower, it would have retraced and then push off. Okay, this kind of stick was supposed to push off more aggressively, but it didn't want to. That's price proving to us that it wants to reverse. Since we've seen this, we then get in on the reversal of this. Once again, get some feedback into and where you talk to, okay, the opposing side of the range. Now I do show this on the 15-minute, but I opt in for the 5 instead. Now here's some key times for the 1 AM. Okay, I did feel a bit sweet today. So for the London Open, that is from your 3 a.m. to your 5 a.m. This is increased liquidity from the London session. And you want to watch for the early sweeps, okay, from this 1 a.m. far range within this time, okay. You then have your pre-NY, okay. So this is like 7:30 to 9:30, okay, very early, okay. Just building up liquidity, okay. With this, okay, this is 1 a.m. to 2 a.m. by the way, okay. I mean 1 a.m. or 2 a.m. But this is just the institutions position themselves for the New York opening time. And then obviously this is post New York Open, which is 9:30 to 11. This is similar to the 5 a.m. 4-hour strategy. It's still a high probability sweep time due to the overlap and increased liquidity. Okay. All right. This is also when you see that price is doing a 3-stick CRT, okay, which is the accumulation candle, the manipulation candle, and the distribution candle. Okay. Right. So that's we use the 1 a.m. conclusion. So there you go. Another example, this is us using a 2 a.m. now, okay, right? Just know you won't see this on Owanda. If you're using Owanda charts, it will always be 1 a.m. okay, it won't be 2 a.m. And I just opt in for you guys just to use Owanda if you've given the cause. If you're using futures, use this then. For this, then what's price doing? Slow, 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 slow. We get a little sweepy at like 6:30, okay, but it's not our main sweep here. Our main sweep is what time? Remember key times? 8:30. Boom, 8:30 comes in. There's news. Also, obviously, there's red folder news. Just wait for the red folder news. I don't recommend entering before that because this is gonna do some sort of major sweep, which has to do in alignment with your 4-hour candle. Okay, right? That's why I can even trade this on news days. But once you get that, price goes above, comes back to your break block with a little wick where you enter new targeting the high or just a bit more. Okay. Remember, use those TP zones, students. Now, this is where you opting in for the 9 a.m. candle, okay? Now, this one, your session is the mid-morning, if you want to look at that, okay? That is 10:30 a.m. to 11:30, where we could have early sweeps once the New York open volatility has now kind of died down, okay? So this is where I was speaking about, you don't really see a sweep at 5 a.m. and then you want to opt in for this, okay? But no, in fact, even once you see sweep at 5 a.m., here you would see the New York reversal around at 12, okay, 11 time, but you're still using the 5 o'clock as your range. This is where you're using the 9 o'clock as your whole entire range, okay? Right. I mean, kind of seeing price like bulling this out, okay? The candlestick is actually being filled out, but the candlestick is not closed, so pay attention. So now going to 12 to 1 o'clock, the candlestick has closed. This is really low. As you can see, the volume is slowing down because our 9 a.m. is just closed, but it has now established the higher time frame range that we'll be using, okay? So yeah, you're not really doing anything, you're just waiting for it to happen, okay? But here's when the range has been created for your 9 a.m. candle, because what, 9 o'clock, it is 9, and then there's 10, there's 11. Come with us, okay? There's 12, there's 1, that's 4 hours, okay? Right? So it is now closed, and that is when you can use it as your range, okay? And then 3 p.m. to 4 p.m., this is literally going to mark close. We now have the power sweep where it's a final liquidity grab as we start to get to the session close. So now this is another example here. This is where we use the 4-hour, 9 a.m. or 10 a.m. and you get a sweep. As you can see right here, we literally got the sweep at market close here. Okay, right. We do kind of bounce up and down there. I really don't know how some brokers allow overnight trading, some don't allow you. So just check on your regulation with your prop firm. Once again, this is pretty late. With this, I would opt in for using a different model that I really go over when I personalize it. But this is an option, okay? You can still see price gaps away, but it still gives you a good TP. I mean, I'm seeing Olag do massive things with this. He literally gets trades TPing into the next morning, okay? Now, the target setting, okay? I'm really giving all of this for free. Okay, good. So this is drawn from the recent high to low, okay? Now, with drawing this, okay, if you're bullish, okay, you're drawing this from your 4-hour candle high to the sweep below, okay? Notice that I did not say fully the CRT low, okay? Because on a given day, price, if it's sweeping on a bullish day, price will sweep this low point. So this won't be your lowest point, okay? Right, your lowest point will be somewhere like here. So you're drawing from the high to that lowest point, okay, as price is reversing back up, okay? And you're getting your entry. And this will give you your zones. Now, you want to go in your Fibonacci and make sure you enable 1.272. If you don't, just add it in. You want to add in 1.7 and you want to add in 2.145, okay? Now, this is my minimum target when I'm going already beyond CRT, okay? So obviously there is numerous targets, okay? The most surefire target that will hit 90% of the time if price sweeps, okay? Even if you're kind of wrong, like even if you somehow saw us, okay, you could, even if you saw a CIT, right? I mean, even if you, yeah, you pretty much saw CRT on a CIT there, okay, where price is still gonna, just impulse in one direction, this would at least come back to the 50%, okay? Which is why I'm saying that you can enter here and then literally target like there, okay? It's not a good RR, but it's the highest winner, okay? But to be fair, with that even, I mean, you still be okay, really, okay? So the next one, just make sure you're like on the 15-second, like NDL, he goes on the 15-second and he's in within 30, he's out within 30 seconds, okay? Just to get a good RR. For this though, the second one, so 50% of the range, the second one is the obvious opposing liquidity, and then this is the first minimum target, okay? Let's see if you are still kind of having some sort of volatility in the day, you could target this, okay? If you're CITing, okay, that's like literally price can impulsing, you're targeting this, okay, the 2145, right? The 2145 or the 1.7, because prices has the volatility to kind of reach, okay, right? If it's a bit slow on the day, you can kind of see we starting to slow down, getting very late in the day. Then I'll say, okay, you can go with the 1.27 for your CIT, okay? If none of that made sense, rewind or book a call, okay? That's the way, that's the only way you can help yourself out, okay? The community, that's locked in, that's locked for a few days. So the start to finish for a bearish one, here's a very good example. Here is the far low and then not the far high, okay, because this would be a range high. But look, we really went past this. So what's the logic of doing that? You go to where price went highest, which is your sweep, okay? If you are CIT, and then you can go from the far low to the far high, because price would not have swept this high point, okay? It's just gonna shoot down and continue shooting down, okay? Makes sense? Good. Now, once this does, once again, you're targeting at the 1.7 or the 1.272, okay? Drawn from recent low to recent high for bearish, drawn from recent high to recent low for bullish, okay? Now, let's reiterate this, okay? This is the checklist for our CRT, okay? Once again, I only trade at this one time every single day, and I still manage to make money, and I never have to look at my daily buys. All it requires is one candle, right? I'd even go ahead and say that even with bad psychology and fairly decent risk management, okay, you can be profitable with this, okay? Because the thing is, the strategy is doing much of the heavy lifting for you, okay? So just follow it, follow what I'm teaching. You should be good, okay? So with this is the main 2025 strategy I used, okay? I'm still using it a lot more in 2026, but it is our CRT. So you're marking out the 4 candle high and low. If it is Forex or when the charts, you're using the 5 o'clock. If it is futures or FXCM, another broker, it is the 6 a.m. candlestick, okay? It's the same thing, just different labeling, okay? Maybe sometimes different pricing because of the time variation, okay? Well, I'm using this mainly on gold, on NASDAQ. So, firstly, we want to sweep off that CRT within what time frame? 9 a.m. to 11:30, okay? You don't want price to quickly return into your range. You do not want price to break out and then just stay above here until New Year's come, right? You want it to actually break out and then come back in. That's what a sweep is. It's a quick move out and then back in, right? Isn't a whole goodbye, I'll see you next time, right? So that's what you want for an ideal SPY setup. So as you can see, since we swept the higher, our bias is bearish, okay? If you guys notice. But now once we have that, the next point is additional liquidity. So I just did a quick markup here. This is your far candle high, okay? That's why we have this high point, and here is your far candle low. You guys can't yet, okay? You guys can't really see the high because I didn't really extend it here, but there it is, okay? That's your far high. Now you want a additional liquidity. What is that? What is that? It's just extra RL or internal liquidities. There is internal liquidity, okay? Right, so price of that out. Your CISD, which is going to be with that body closure. So you can see price closes below here. You can see here. Here is a more aggressive entry. This is more confirmed, okay? Stop off the high. Very simple. Targeting the pull inside. This is the cleanest CRT trade you'll see, okay? Bang. Like, it's so clean. It's Like I literally look at that and I salivate because of how simple that is. Okay. Now, once again, these highs and lows are pivot points. Now I use the word pivot very intentional because what does a pivot do? Once price reaches it, it rotates, it reverses. Price reaches this point, it rotated and reversed. Since price has reached this point, there's a high likelihood it could rotate and reverse. But why is this? Because that's what a consolidation does. That's what a range does. It goes from high to low, from low to high. Okay. But now let's go into the entries again. Now, this is where the source of this, where you guys would actually want to understand, that's my entry model. And to some, that seems like that is the bare minimum. It can't just be it. No, that is it. Right? If I'm feeling lucky, I might add a SMT, but even with that, it gets, I even think that's a lot. But this is all I need. The reason why I say this is you want your entry to be simple because you don't want to hesitate. This is the point. The entry is simply the vehicle from you going from thought and analysis into execution and entry and result. If this has, like how I did in the beginning, 15 different confirmations for you to enter, not only do you get confused because there will always be conflicting signals. Secondly, if you ever take a bad entry, or you firstly will never see a perfect entry because nothing will ever always align. The third one is that if price does not go your way, you don't know what to truly pinpoint. Or this, less variables, less time, fast execution, and then you also have just carefree mind. Okay, my goal as teaching this to you from the Nova Legacy is for you to have gain clarity in your trading through a simple mechanism with one candle, and then you with zero emotional stress. Okay, right? So that's why my high, my high low, my high. Once I see price has closed below my high low, okay. Keyword closed. It cannot just be that price has reached the zone and it's kind of just wicking around it. No, I need it to close because if price wicks this, it simply becomes a turtle swoop. Okay, it's simply just price going higher now. You guys ever think of that? Okay, so you want to see that candle close to see price committing itself to the reverse. Okay, price putting its feet in the game. And not only that, you want to see price retract of your breaker block. Okay, so I repeat, your breaker block for people who skipped ahead, this is your order block. If price wanted to go higher and respect this order block, it would have pushed to the upside. Like this green candle would have been bullish, yeah, a lot more bullish. But price failed to do so. Price saying no, I want to reverse. So it disrespects this and breaks that order block, which we can use now on the opposing end as a means to continue that bearishness. Okay. Now, once you do this, you want price to actually give you a reaction. So which way you can see my entry is actually based off the bearish candle that is made within the breaker. Okay. Not the immediate limit order, but price actually showing me, all right, here's some feedback. You can enter. Okay. If it's a very fast day, I would suffice, okay, for at least a candle close at most. Okay, that into here and then stop has to be a bit more higher in case price wants to go a bit more higher. Okay, now you can also see what's happening here. Major problem. The order block is not getting tapped. So you've done all that analysis and you're not in the trade because you're looking for the perfect entry, which you'll never get. Okay, you're not God. You don't know what's gonna happen next. You can't just speak something into existence, okay? Right? You can't just tell the market to go here and then it's gonna reverse and go there, right? But just make it that you have enough on your side, okay, which is literally the bare minimum, so that you can see that price is gonna want to reverse again. Now, finally, this is our IRS model. Has nothing to do with the tax man, but it will help you to feel a bit more carefree when you are paying him, okay? Right? So this is our model that we use, especially for the candle impulse theory. So price firstly starts to impulse, it then ranges, creating that liquidity, which will then have to get stripped here as well. And then once price has done this, it makes that impulse. Okay. And once price continues this, it'll continue this loop. Impulse, range, sweep, impulse, range, sweep, impulse, range, sweep. Okay. And you get the idea, even on the opposing side. Impulse, range, sweep, impulse, range, sweep, impulse. Okay. Now finally, the time frame alignment, your daily sequence, okay, all the way to your entry. Okay. We already went through this with little snippets, but just to drive it back home, if you really want to add that daily time frame, okay, right, you want to go through this route where it's your daily, your 4 hour into your 5 minute, okay. This is 5 minute, not 15, 5, okay, guys. So daily, you're just looking at the candlesticks solely, okay. You understand at least your previous day high and low. So if it's a bullish candle, price has a high likelihood, especially if it's massively bodied like this, to seek those highs, okay, right. If it's bearish, it's going to seek the lows, okay. Your 4 hour, look for what type of CRT you have. So either it's a 3-stick or a single candlestick CRT. And then the lower time frame, you're getting your entry models, which is your turtle soup and your change state, okay. And then with the CRT, okay, here we go, daily candle, very strong bodied. You then go on the far, you look for your CIT, so your candle close, okay, your previous candle close, the 25%, you're buying at that point to go higher. And the lower time frame, once you get that CSD, you enter your trade, go higher, okay, guys. That's just some alignment with the daily, okay. Once again, these are the two that I rotate between, and it might take you guys some time to transition, so at least have max 3, okay. I'll say that, you know, if you want to be a bit more technical, you can have it like less than 5 minutes. So you can have the 5 minute, 3 minute, 2 minute, okay, as like your lower time frame accumulatively, but do not have it that you have the weekly, the daily, the 4 hour, the 1 hour, then the 30 minute, and then the 5 minute. Like that's too much, okay? Because at that point, you're gonna see 15 different CRTs that end up looking and going all the opposite direction, okay? And that will be inevitable. So that's why you cut out the fluff, okay? Now coming in on this is our next stage here, the volume, okay? Many will skip this, but it is something I want to share with you guys, okay? Right? It's not a major make or break, but it's a good addition. This is the only addition I really add to this, so you guys just get an in-depth understanding. This is all about certainty, but not confirmation, okay? It's certainty, right? It's just confirming what you already know. Without volume, you would already know that the candlestick is already bullish, okay? I already showed you guys, giving you guys a playbook to know, okay? The volume just shows you it, okay? So you can be like, okay, I was right, okay? So on a volume profile, what does it comprise of? Now this is the free one. You can literally go onto the same toolbar section where you got the gap box from. You scroll down and you'll see the volume profile, fix range 1. Get that and plot on your chart, okay? So you do it from any range. So this is the low to the high, and you'll see that it first has a O dive movement, okay, or a bell curve. The higher the bar, the more volume. The lower the bar, the lower the volume, okay. Then there are 3 lines extending from your POC, which is the price most agreed upon, okay. This you see prices majority of the time consolidating a lot within here because everyone was kind of happy within here, okay. People weren't pushing the price too high because the sellers were like, no, this is a good price for this asset, okay. Buyers, when the sellers went a bit too low, the buyers like, no, let's push it back up. That is a good price for this asset, okay. Up until the stability was shaken, and then the buyer said, okay, yeah, flip it. No, let's go higher, okay. And that's where the volume area high comes in. So this is the standard deviation from this, okay. In simple terms, it is the 35%, okay, away. Okay, so this, at least this entire area covers 70% of the most volume traded, okay. This is 35% on this upper end, and this is 35 on the lower end, okay. Volume area low for what I just explained, okay. The lower end of volume, okay, for that point. So now what does this all mean, okay? In your value area, which is this area here, this is where most people consider this as a fair price, okay, within this area. Outside of that, that's what we considered inexpensive or cheap or inefficient pricing. For a lot of you, that might sound very, very familiar, okay? Right. Now, on the other end, we have our low volume nodes. These are these unnoticeable zones that price doesn't want you to be fully aware of, okay? But they are very important. Now, these are found on the tapered ends. So literally the lowest part of this volume area, the lowest node, or within what I call values. So here is a high value area bar, another high value area bar, then price dips in here. That is our low volume node in our value, okay? Inefficient pricing. Now here are my settings, okay? So once again, pause video, take a screenshot, take notes, do what you gotta do. Once again, If you want to take the smart route, just get it in the description. Okay, it's already there for you for free. Okay, everyone else who's already in our community, you're already gonna be get sorted this out before the release date. So once again, 3%, and these are just all colors. Okay, everything else on the inputs is default. Okay, guys. Now there are 4 common shapes that our volume profile can come in shape of. Okay, we have the P shape, the area where our volume area is at the upper end, okay, of the range. And then you have the B shape where the volume is secluded to the lower ends of that range that we drew this from. The D shape, which is the standard, which is simply just everything is balanced and fair. Lower end at the highs, lower end at the lows, but everything's going on in the middle. Then you have the B shape, which is kind of shade bias. A lot going on the top and bottom edges, but the middle is simply inefficient pricing. Okay, and the B shape can come in. It doesn't have to be like two. It doesn't have to just be 2 crests where there's 1 crest and 1 crest. It can be another little mountain. Okay, like over here, you can see there's 1 mountain, 2 mountains, and we'll just say like a 3rd mountain here. Okay, but the main one that our volume profile is showing us to is this POC, right? Simply, if price returns a POC, how you want to use it is that any POI within that, price will reverse from this point. Okay, as you can see, price comes in here, reverses. Now if you zoom in, you'll see that within this there is another area, which is just a simplified order block. But what you notice is that it is between the POC and the volume area high. Okay, very strong area. Dips in, dips up into there, and then retraces to the downside. Now this is the second retracement model. Okay, here as we use our low volume nodes, you can see that I actually ignore this low volume node because this low volume area led to no price. You can see just a gap. So we emit this. This is a low volume valley, as you can see right there. Low B shape going on there. You guys can visualize that. And then here's another one, obviously very nice and beautiful. But I see it. Okay, you can see right there. But remember, I'm gonna show you guys what we're gonna do with this. Okay, we are using this for our CIT. Why CIT? Because this is one impulse. So even though there's low volume nodes here, it has to be in context. This will be beyond our optimum zone. This is within our optimum zone. That's why we're using this one instead of these others. Make sense? Good. Okay. And as you can see, price extends to the high side. Now, with this, you can see that a lot of the time, price goes from the low volume node in the initial spike. So you can see right here, impulse, retracement, fast impulse. Okay, targeting high. The POC nodes, as you can see right over here, which is all the way down here, that happens over a long period of time, which is what we call deeper retracement. Okay, this is when you're looking long-term view. Okay, which I don't really do a lot of the time, but it's just good for you guys to know. But for like a CRT, this example would be here's your CRT high, this is your CRT low, and then this is a previous retracement leg. Okay, I mean a previous impulse leg that you're using to just identify that price has just made a sweep. Will it keep on going lower or will it just push up? Okay, those are questions you ask. That's what the volume profile can answer for you. Okay, and you get your entry here. Entry is based off candle close, retracement, entry, bang. Okay, off the breaker. Now let's look at this in terms of a quick example. So here is our candlestick high and low. Okay, now what you notice is that that is also a very strong candlestick. Okay, we just completed a CRT. It's about to impulse, it's about to continue low. Okay, it has a volatility. So what we do is we get our little tool. So from the candle high to low, we have this volume area, low volume node. Okay, what is happening? Price gonna come into it. Okay, now the reason why we choose this also is because it aligns with our GAN box. This is the 50% of this candlestick, our PC previous candle equilibrium. We do not close above this point. The reaction, you enter and you're targeting your extensions. Plain and simple. Plain and simple. Okay, but there you go. That is the entire context and theory lesson. Now what we're gonna do is I'm gonna go on my chart and I'm gonna go throw up a few examples just so you guys can see me go through them with you, and then I'm gonna throw up some live recordings that we personally took in our live community. If you guys want access to this, okay, the resources are all in our description box. Okay, we can firstly get this entire presentation, okay, sent directly to your email, so you can download it, as well as you can book a call with me if anything within it did not make full sense. Let's dive in. Now, our very first example is an example that many traders could get confused when they start using the system. So I'm going to show you how to dissect it. Firstly, looking at our last 3 to 4 candles, you can see that they were bullish and they're sort of low volatile. In this scenario, you'd be thinking CRT for the day. But then you look at your 5 o'clock candle, which I use. Now, it is very important that you understand the bias behind this. Firstly, this was a 360 CRT where liquidity is already swept from this candle high and the price distributed lower, which means price is taking out all the liquidity on the upside. Thus, we're only going to continue lower. So you are solely using this impulsive bearish candlestick to define your bias all the way to the downside. So this is a CIT trade. And as you can see, even using the CIT on the daily time frame gets you an 89% win rate when you're going bullishly and an 85% win rate when you're going bearishly, and stands the test of time even on the 4 hour. Now, just to reiterate, you want to be using this on UTC -4, and once again, I am on Owanda charts, just to give you guys clarity. Now that you understand that you're using CIT for your bias, because of this impulsive candlestick, you draw your gap box from the low all the way to the high of that candle. Now you find the gap box once again from your trading view side panel all the way at the bottom, and here are my exact settings. Now at this point, you are simply waiting for price to come into the 0.25 to 0.5 level, so you can enter your trade and then target the lower levels. So as you can see, I hopped immediately down to the lower time frame. I do not waste any time with any fluff in between. So now that I'm here, you can also see that the bias is very clear. It is bearish. So some of you also have been asking me, what is this indicator that gives me the candlestick on the side? Well, it is my higher time frame candle overlay power of 3 by the tick magnet. And here are my exact settings I have for it, as well as the styling. So pay attention to the price action as well as the current 4 hour candle we are trading. Here is 5 o'clock, the range that we're using, and the candle we're using to trade, which is 9 o'clock. So we've just gotten into our 0.25 optimum level. So waiting for a change state. So right over there, we have our clear change in state of delivery with a candle close, and as well we are coming in to our breaker block area. So now we just need to see bearish action from this area, and there you go. Enter your trade, stop above your 0.25 level, as you can see, and you can already see that that 4 hour candle is now rejecting. Now that we have our entry and our stop loss in place, we now need to get our TPs, which we get from this low, not the 4 hour candle low, the lowest point on your chart, all the way to your 4 hour candle high. And here we can just target the 1.272 for a simple 1 to 2. So as you can see, that simple candlestick got us our bias, it got us our entry, it got us our stop loss, and it got us our TP. Everything was defined to the T, and there's not 15 indicators, not 15 lines that are going across my chart. So as you can see, we now entered the trade. And yeah, at this point, you're in the trade. I'm already off the live stream. You have gone to go get your lunch, you're enjoying time with your family, you just letting the market do its part now because you have already done yours, which is executing. And as you can see, we do end up hitting TP by the time of just before market close. So that is your candle impulse theory. Let's go over one more example. Now, this one is going to be based off CRT. And the reason, as you can see, here is just an automated backtest on this. 1,400 trades tested with an 84.2% win rate, with 1,200 of them being winning trades and then 200 being your losses. So now on your 4-hour time frame, you want to make sure you have the CRT overlay 2 by the timeless one on your chart, and then you should get these black lines going across your screen. This simply is allowing me to automate my trading. Here are my exact settings, the 1, the 5, and the 9, but I use the 5 o'clock candle, 90-minute duration, and then here are some of the style changes. Make sure you are adding this on your chart. Pause the video if you have to, and then come back. Now that you have this, what you can do, you can even add alerts onto these lines. So that way, price, whenever it tags these areas, it notifies you. As you can see, I have this already set up. So it even simplifies my trading a lot more, and I'm not spending time waiting for price to sweep. I just get an alert on my phone that price has swept the far high, and that is when I start to monitor the chart. Okay, my goal is to make your trading a lot simpler and automated and efficient so you can live the life you want to live. Okay, now that you have everything set out, your bias is the easiest part. Looking at your last 3 to 4 hour candlesticks, you can see that they're all indecisive, more wick than body. They are very small. There is bearish, bullish, bearish, and bullish, and bearish, and then bullish again. As you can see, it is confusion with the market. It is a ranging day. So with this finally confirms that we want to use CRT for the day, the candle range theory. You see how simple that was? I didn't scroll all the way to the left and look at the last PDRA or some all-time high. I simply look at what was shown to me because I'm only going to be in the market for the next 10 to 15 minutes. So now you have your 5 o'clock candle marked out. You then go on the lower time frame and you wait for a sweep. So our bias depends on the sweep. So since we have swept the 4-hour high, we now have a bearish bias, so price can take out the liquidity at the lows. If price swept the 4-hour low, we would have a bullish bias, and that would also be good because we could continue with that trend, which I would prefer. But once again, this is CRT and price is wanting to take out liquidity. So with our entry right here, as you can see, we have firstly our change in state of delivery, price closed below here, and we have just returned to this breaker block. So now with that being shown, wait for bearish sentiment. Okay, there we go. Enter your trade, stop just above your CRT high, or you could place it at all time high of the day right over there. Okay, and you target the opposing side of your range. Now once again, take a look at that 4-hour candle. And there you go, price hit your TP. If you wanted to be a bit more cautious with this, you could have actually gone for the 50%. Which is right over here. This one has a 100% hit rate of getting hit majority of the time, but this lowers your hit rate by 80%, but you will still end up getting a lot more profits with this, and I prefer this TP instead. Now let's go over some live trades that I'm going to take the next morning with you guys. Today is actually a CIT. Okay, I was given a bit of fair game to say that it might be CRT in the beginning of the session. So just quickly recapping today's session. Okay, so pre-market was looking it did show me a bit of bullishness, but then I did prefer and prioritize the 9-3 sweep, okay, as I usually do, right? But now as you guys can see, it is going bullish right now, okay, and we're taking that off the CIT now. So you can see a full body candlestick, right? And also on the 4-hour, what do we see? We've been bullish since pre-market, okay, so we've been fairly bullish pre-market. So bullish candle, another bullish candle here. Here was the last CRT. This is from yesterday. We took out the high, took out the low, we swept this low point, and then now I started going bullish, okay. So what is this? This is CRT into CIT, okay? See there's CRT making the sweep, the final sweep before price starts to get that impulsiveness to go in the opposite direction, okay? Now, as you can also see, we have our GAN box, so we came to the 0.25 and 0.5 area, our optimum zone there, and where we're targeting this external high point, okay? Other highs we could look at are Fibonacci's, so actually could go for a bit more if we want to go for the max extension, but I'll just align with the 1.7 for today, okay? And also here's another example as well. We did have another pre-market CRT, so here's CRT of this low point, price taking that liquidity, price sweeping that liquidity, igniting it to impulse later on, okay? Right, on the lower time frame, what else did we see? We looked at our volume, okay? So as always with any CIT, we use low volume nodes, okay? So right here, this is the identified low volume node that price has gone off of, okay? Where do we draw this from? The CRT, not the CRT, but the candle low to the candle high. Okay, so pretty much just this leg over here, okay? And here you can see here's the high volume area right here, and then we taper off, okay? Right, low volume here, then we increase volume here as well, okay? So that relative area, I'm not going to do much positioning with this just yet, just because I know what time is it now, 10:20. We might go up, down, then up again, like how we did on Monday, if I'm not mistaken. Monday, what we did do was exactly that, okay? We missed the initial CRT, okay, with this expansive move here. We got in over here, and then watch price do up, down, up, down, up, down, up, down, and then literally at 11:30, that's when we finally reach the TP. So the most managing I'll probably do with this is like de-risking, but I wouldn't go break even, not yet, because I know we could come back down to the entry point in any time. But entry wise as well, same entry model we use. So there's the high point, the 9.3 high. We close above, we retrace back into this area, enter, then we're targeting higher. Okay guys, that's our CIT. It's good practice as well. It's good practice, okay? We have majority of all our trades the last 2 weeks have just been consistent CRT trades, which I have taken advantage of, okay? Made some very good money on, but it's also good to see a few CITs as well coming back into our arsenal here. Okay, so let's see. All right, okay, I'm up a good amount here. Wow, look at S&P. I think S&P has a lot more volatility than Nasdaq today. I remember when it did its sweep, it went all the way, right? It went all the way to the 50% of the range here. Yeah, basically we swept the high point and then we came to the 0.75, whereas Nasdaq barely missed the 50% there. And now this bullish move, I mean, I definitely do see there's a lot more weight behind S&P's one. Okay, but let's see. We are just itching towards TP here. Oh, that far candle is looking juicy. Yeah, it's literally the same far candle that brought price down. CIT, 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 and then price CRT'd. Now it's CIT, CIT, CIT. Let's see if we can take out this high finally. And to be fair, there is also a lot of liquidity. I didn't even notice, but there's equal highs here as well. So this is also just like a high value area that I assume price would want to reach. I don't know if we have that also with ES here. No, not really. Not really. Let's see. Yeah, we're pretty far from the high here, which could also be interesting because if we take out this high here, we'd kind of have a SMT going on, but I don't know. Okay. It's nearly 10:30. Yeah, 10:30 I usually start to log off. Let's see if we can reach it before 10:30 though. Okay, that's TP. Okay, before 10:30. Alright, okay guys, cool. Good stream. Okay guys. Okay. So it is 9:44. Already done our CRT sweep for the day. Right now, just looking for extra positions to stack up. Okay, so here's for our candle, the high and the low, and same thing with S&P here for our high and low. Okay, on the 5 minute, actually on the 2 minute, let's go there. If you take a look at this, what have we done? There's an SMT. Okay, one of them takes the far low point. Okay, of here, one does not take the low. Okay, SMT. In terms of our volume, okay, so we're looking at the pre-market volume from this low to this high. As you can see, where the price go to, it stayed within our highest volume node. Right, so we have PLC, okay. Once you flipped over there, that was ignition to the upside, okay. As well as on Nasdaq, same thing. So either or relatively good, okay. Right now I'm looking just to add on to this retrace onto this push here, like that, okay, to the upside here. Giving stop loss a lot more room, and then just going for these equal highs here. Okay, let's just send that to the community as well. Okay. Yeah, so we see that was the volume node that gave price to move up here, and then here you can see as well, same thing here. This is a bit more simplified, but same thing. Once you flipped over that volume node, okay, that's an ignition, okay, to enter a trade. Now, in terms of the second leg here, right, because you have another leg that price is extending off of, taken from this low point to that high, okay, right, where's volume indicating to this area, okay. Other zones that price could drop down, so I am expecting this low point here, okay, that's another low volume node that I could see price return to. And in terms of year, okay, low volume node already reached into that one, this one right over here, okay, that aligns with this this high point, okay. So we're just going for a static simple one-to-one, okay, as we did come in here late, just gotta be adaptable with it. And I mean, this range could extend. Let's see what the max extension of this range could be. Okay, that's 214. We are pretty much at the 214 as well, so we are kind of stretching it, to be honest. Same thing with the ER, we're sort of stretching it a bit more. Actually, just check it, it's looking pretty good here. Okay. Yeah. They're getting a lot more of an aggressive push here on S&P. What time did this sweep happen? Same thing, 9:30, 9:26. Okay, fair, but 9:30 when we actually did the real move. So same thing, candlestick, time, volume. That's your golden equation. Alright, that's the sweep we're getting. Let's see if we can reverse back up here. Retesting the previous volume node. Might come into this low volume node. I'm gonna see how we play out here. Okay, strong rejection after we did the liquidity sweep, and still bouncing off the volume node here. So it's gonna be very interesting. So volume node I'm referring to the one from here as well. You can see bang POC there. Okay, so it's like an inverse. Once again, regardless of how good the trade looks, okay, always gotta have your protection. Yep. Morning everyone. So that's what we're in here. Just trying to get the continuation from the 9:30 move. I'm gonna trade it to end the session, yeah. Quick recap from the pre-market. So pre-market, there's our far candle high for Nasdaq and our far high for S&P. Hope you guys can see the difference, right? The next candle sweeps the low, the other one does not sweep the low. What does that mean? That's a S&T. Not only that, that is a divergence, okay, upon two correlated assets. We then took a look at our pre-market, which was our standard range, okay, so we did know there was gonna be a sweep on one of these pairs, we don't know which one, okay, and we did see we end up getting a perfect sweep on a Nasdaq, okay. We use that knowledge of the sweep in our advantage, okay. Now the timing aspect, 9:30 as always, 9:30 market open, what does price do? Spirals to the opposite side of the range, okay, just like any other day. And then what was our last deviation for this? We needed the volume, so that's why we took the volume from this low point, okay, all the way to the high. And as you can see, where is price having the highest amount of volume being traded? It's at this POC, okay? So even once we close this candle within here, okay, that would be our first entry, or when we actually flipped above, okay? Right? So these are the prime entries, okay? Once again, also as well with Nasdaq, above the POC, okay, we close, and below the POC, we're buying up, okay? So those are the prime entries. Right now, we're just getting the scraps, okay? Which are these re-entries, okay? And I'm basing this off of the POC as well from here. Okay, liquidity sweep that we created here, and just leaving some space in case we come back to this low volume node here. Okay, pretty slow though, and yeah, okay. Since this is Monday and is a re-entry, I am low risk than normally, but we're just trying to see if we can get any re-entries off of this. Okay, this is what we are doing. We're gonna see how this plays out today. TP is just targeting as well these relative highs here on ES. Okay, and same thing with Nasdaq. There's some relative highs as well. Okay, yeah, there we go. Okay, Friday's trade got taken out with a bit of profit at BE. As I said, right, market close comes, we're gonna close the trade because Friday didn't really have all that volatility, and we did see that being played out. Okay, and also from just a high time frame standpoint, that liquidity, okay, that consolidation, you guys will see it in the previous live streams. You saw that price was consolidating here, and we were looking for price to take out one of these areas. Okay, and you can see that we came up all the way to the highs, then we reversed back. Okay, what model is this? Is our false break. Okay, and now we're just doing another super reversal to the upside here. I will see how far this does reach to. Okay, once again, I have a major rule. I don't go against the preceding trend. So I'm only taking this buy because the market has showed me that it wants to be volatile for the buys today. Okay, if we're still sticking to this bearishness like here, they sweep the high, then lower, then that would be our bearish move for the day. Okay, so keep our buys very simple. Okay, once again, what is our winning formula? Okay, it is our candlestick, our time, and our volume. Okay, right about here, still above here. I'm gonna probably go and de-risk a little bit because I can see we did not come to this low volume node. Okay, I just want to manage it as well. It is Monday, but I do see a good volatility with NAS, so that is a good sign here. Okay. Does everyone know that we live? Let me just make sure. Let's send this out. Okay. There you go. There we go. There we go. There we go. Okay. Because yeah, right now, since we're out of the range, okay, it is fair game. Okay. You gotta remember that the range is our environment that we are used to. Okay. Everything within here, once price made the sweep, okay, everything is fair game. Okay, price is gonna reach the high. Okay, that's our guaranteed spot. But going beyond that, okay, it does become a bit more of the in the heart of the market. Okay, you're at its will, because as well I can see that we just reached as well as our max TP we usually go for Nasdaq. Okay, so a lot of this is usually out of our boundaries. Okay, so that's why I'm being very cautious with this one. Okay. I'm also just doing this in case everyone else maybe missed the initial entry. I'm pretty sure people should have got this because this was the textbook setup. I think I also spoke about it in announcements as well, you know. So let's see, we'll see 10, 15, 10, 10 now. Okay. I'll also take some time for any questions if anyone has any questions. Okay. But yeah, we up an okay amount, right? But yeah, I'm definitely looking forward to this week. A lot of news from going around Dubai, Iran. Praise out to them, but definitely a lot of volatility. But with gold, especially with gold, people trading gold, we've seen that transfer from the indices, from the DXY into gold. So that also plays a major part, a major role in just these currencies. to see here. Very expansive for our candle here. Okay, expansive for our range. I am seeing that we took out a lot of our highs as well. So it's got this initial one, okay, from our previous for our candle, and now we're just reaching into this little gap here. Okay, we did cause a little gap from Sunday opening, new week opening gap here. So that's what we are reaching into here. It's a bit of a weird zone. Do that instead. Okay. I see most of the price wants to reach it instead of rejecting from it though. Flip. Holding. Okay, we have Bizinia, Denise, Shovik, Stan, Tia, Optimus, Pierre came in. Okay, Sonia came in. Perfect, perfect, perfect. Okay, guys, once again. So as I said, guys, I'm already de-risked. I'm on this. It is once again a re-entry. Okay. A re-entry model here. But yeah, these are perfect, very, very good. I'm surprised no one got into these. Okay, Lag is doing good. Mm. just bouncing up and down here. Not even really up by much. Okay. So just bouncing up and down here. This also falls into our not our liquidation, but our market cycles, impulse, manipulation, impulse. Okay, guys, yeah, so this is not one of those very fast trades. As you can see, prices bounce up and down. I don't want to keep everyone here just to watch this play out. But this is probably the only entry I'm going to get. I'm probably going to let this go. Since it is Monday, I can get a go to at least the new PM session, unlike the Friday trade. Just gonna know, probably leave it overnight if I really need to, but I doubt it's gonna take that long, honestly. But then I give updates on it. We just sweeping our liquidity and then going higher, sweeping our liquidity and then going higher. Okay. One more check for any questions. Hopefully everyone's good. Everyone's good. That's a good start to the week though. Okay. Definitely a lot more CRTs coming through. CITs definitely with all the volatility that is within this week. Also, if you guys want, since it's a very heavy news week, I do recommend everyone does you know, try and look into a lot more other enhanced news events. I think I'll show you guys one that would be good for you guys. Glint. Yeah, here we go. Okay. So I'll show you this before we wrap up for the day. Okay, hopefully you guys can see that. But yeah, here you go. See, Glint just giving up very recent news events. As you can see, this one's about Iran. Okay, so you guys should just know the basics. Okay, something bad's happening here. I mean, one economy just know it's gonna have an inverse correlation on the opposing one. Okay, big one is gold and DXY. Be checking on that. Okay. But as you can see right here, there's all the news events that you guys can keep up to date with. Okay. So yeah, glint.trade. Everyone that is interested. Okay, but on that note, I think I'm gonna wrap up today, and I'll see you guys tomorrow. Okay. Cheers, everyone. Enjoy the rest of your day. So as you can see, that trade also full TP, and as always, sent out to the Discord and documented that we played it all the way to the final TP. And I mean, like, this is some days after, but you can just see day after day the black lines on the far can that I trade. CIT day TP, CRT day TP, CIT day TP, another CIT TP into CRT, and there we get one loss. The next day, I think we took a TP on ES if I'm not mistaken. The next day, but you can see here's some more TPs. But you guys get the idea. You guys see all the live executions, all using a single candlestick. Continuation day, candle impulse theory, and then ranging day, candle range theory. Okay, you can see here there's more TPs with ES here, and all of this is in our Discord. Okay, so here we go. The trade from Discord was a inner class, so I didn't want to record too much of our audio because I just kept it for them. But yeah, CRT sweep, then liquidation model, we're going upward here, and not too much context from volume here. Yeah, I mean, like, look at this. I mean, yeah, I could say the volume area low, but it's a range regardless, so there is going to be that volume area within there. Okay, but let's see. Trying to do everything super fast. Yeah. Okay, my other side. Now we see how the trade plays out throughout the day. And yeah, it's pretty good. It's pretty good. Okay, pretty good. So I'm gonna quickly go over it with you guys so you guys get a full idea of it. Okay, so we're pretty much sitting on the live stream for a lot of time. Okay, we're just waiting. But this is simple 4 hour. Okay, so 4 hour, what was our 4 hour showing us? Okay, so you guys watched all the other lessons. We're looking at our market structure. Okay, and our market structure is built off our candlesticks, and our candlesticks are telling us that it's bullish. Okay, here we're looking at candle behavior. What's price doing here? It's slowing down. What does that mean? It's ranging. Okay, so using the candle range theory, and we want to be bullish with the candle range theory. Okay, so that's our anti bias. Okay, so we're gonna be going to the upside using the CRT as our strategy. Okay, entries was on the 2 minute. Yeah, we were pretty much waiting from 9:30 until 10:30. Okay, which is my usual cutoff time. Okay, but right here, this is some of the liquidation models. Okay, liquidates at the highs, liquidates at the lows. Okay, we get our sweep at what time? We got our sweep right here. The first one is at 10 o'clock. The second one is at 10:08. Change their delivery, break a block. We enter on the close. Okay, right, and now we're just targeting firstly the CRT high and our Fibonacci extension. Okay, if you guys watch the course, you guys should be inclined with that. So we're gonna see how that trade plays out, and as you can also see, it was already sent out to our disc. We had like a full on thing where we're just like with everyone just waiting for this setup. I mean, yeah, the bias is pretty much predetermined. As you can see, yeah, we're all waiting. Literally, that sweep is the sweep that's happening right now. There's the same red line going upward, and then the same red line also on as we didn't really get, but yeah, everyone is watching and having the same bias, which is good because we're all trading the same candlestick. We should a lot of time have the same bias. Okay, but yeah, here we go. It's gonna tell them to like de-risk because you are pretty much at the 50% of the range. Then we see how it plays out. I'm gonna go gym, get my lunch, and adios, amigos. Okay, just to notify the Discord that we have reached the CRT higher. It's good. Now we're just going for extra better profit. Man, price gives us that's good. If it doesn't, perfect. We have fully managed our risk, taken our profits, and now we just let price with the rest of the thing. We execute on the plan. The main thing is we execute on the plan. Literally, the plan that we saw from like the beginning of the stream, price is still consolidating all the way over here, executed all the way till now. And now we see that volatility. At what time? It's 10:30. Usually the end of my live stream. So there was one of the longer live streams. So at 9:30 and at 10:30. And I stuck through with them until we got our entry. That's the main goal. Once we get our entry, then we let the market do its part. I'm really supposed to be at the gym right now. Yes, we had a bit of upside potential, then we were brought back off to reach our highs here. So I'm just gonna assume that we wanna be bearish for the rest of the week. Yeah, so we do get a sweep of these highs, which we do seem like we are about to. Over here, we also sweep the highs on Nasdaq. Pretty good to target lower. Let's see. Time is it still 9:40? Yeah. Quickly go over 4 hour candles as well. 4 hour candles, what we're following. Still the same volatility. Still range-like conditions all throughout. The immediate trend is sort of still shadier because we are still bullish, but we definitely lost a lot of volatility. Yeah, all we did was come up to those equal highs and we just start rejecting. We didn't even take out the massive high here. It'll be quite interesting to see what we do today. It'll be very interesting, yeah. So we're still very strongly bullish. Um, This is probably news, A3 news. That's good. Mm. No, yeah, we're all ranging here.
Tell us about the model you want to trade.
Mm. Yeah, so I'm still using CRT, but we're still ranging in our week here. So like last time, what we did yesterday was that price was ranging. So we're expecting range-like conditions for our CRT. Which Robert actually saw that yesterday was a double sweep, right? I mean, yeah, it is, okay. But obviously, this is already an A plus setup, okay, because of the false break and everything, right? You swept here, then I think at 1:30 p.m. Then we reverse back down. So this to me already shows that this is a very range-like market, okay? Because usually after a CRT like this, prices continue in that direction for probably the next day. But the fact that we came back down probably shows that price wants to continue this range, okay? So as you can try to continue the range, and here we currently are. Um, a good thing is that we have not taken out the high on ES, but we have taken out the high on Nasdaq. So we do also have a SMT CRT as well. So
That's correct. But there's also a little bit liquidity above, and there's a fair value gap also. So I was looking at that, and I was trying to get your how do you call this? Your volume profile. And now we are at the volume profile high if I'm correct.
Okay. Okay,
I
so,
don't know if I'm using it correct, but try to.
yeah, definitely good. Good. Okay. So what your bias is bullish, right? Or
Yeah, it's bullish, but
okay.
Yeah, that was my question.
Okay, good.
Was my third evil this week.
Oh, okay. Um, I mean, it's good to have that as well. I do see it happen. I'm just looking at yesterday because I just had the chance to go fully bullish. I just failed to do that. So I don't know. Maybe I don't know what Nasdaq's plan is. It stayed below this lower high. That's what I'm looking at. So, but I do like this change stage in a few of these things. Might wait for
But
what?
if it's not coming below the 50%, I will go bullish.
Good. I'll wait for this kind of closure, then I'll probably hop in to a quick little short. We saw how long that lasts for. Just to follow main CRT rules, right? CRT sweep. I mean, also from a standpoint of the candlestick as well. The thing is, if this was a very good impulsive candlestick, right? And then I probably would have had more also CIT to probably the upside. But I'm also looking at the candlestick as well. It's bearish. There's a lot of wick on either side. So this is also a very neutral candlestick, right? So there's a lot of pre-market range being created here that I'm just seeing prices trying to sweep out now. And that's also I'm looking at this right now.
And there's liquidity above and below, so
Yeah, on both sides. So in these type days, I'm just like going mainly for CRT until, I don't really see. Trying to see also, yeah. But this to me also just a very interesting gap by price, yeah. This little Trump gap. Very interesting. Usually price revisits these areas. We haven't done that yet. Okay, well, let's see this kind of closure, what this one does. It's about 3 seconds. It's still closed above our CRT high. I'd want something a bit more volatile. But Mr. Dead, when are you looking to enter?
not yet.
Okay, good.
I was looking at the previous day high or previous day low as target, but there's no clear draw now. For me.
Yeah, it is a bit of a in-between day.
Yeah. This morning I took shorts on London and that went well.
Oh yeah. Oh, then you're not even stressed then because you made your money for the day.
Yeah, I did. But I need I need a little bit to bust my 30 mil.
Oh, okay, perfect. Okay, I see. Now that's good then. It's good hunger.
And I love it when you are telling us how you see the markets.
Yeah, no, literally.
But I think a short is a good idea.
I'm trying to find like a trade from back somewhere where we might have had similar conditions. So that's what I'm looking out for right now. Literally just scrolling through my journal. There's so many, but this kind of close like this, I'm probably gonna just jump in, just to add idea to the SMT CRT, the false break as well that's going on, and then I'll see how price reacts to that as well. Just quickly try and open my other stuff here. Right. Where are we? It's Nasdaq. Okay, cool. So I'll just quickly hop in here. Let's see how the first trade of the day goes here. Stop just above there, and then I'll take just to the lows. What's that?
I was just waiting to get inversion of the 50-minute fair value gap there. It's getting rejected. It's in the middle of the fair value gap there.
Yeah, to this, the most I'd also look here on the 2 minute, I'll probably just get like what I call this, like a rebalancing, like bearish feedback, similar to what we did yesterday, right? Just got a bit of bullish feedback from the breaker block. With this wick, as soon as it's flipped bullish, and I entered with that, and that'll be like the last thing I'll probably get in. I'm already like loading up stuff here on my SL and everything. Let's see, potentially I want to get this high. Let's see. Okay, let's see. Let's see how this kind of closes. The sharp candlestick as well. 9:53 is not a major time. Sip gel. 9:30. Okay. Let's see. 9:30 sweep. Right. So the price took a bit of time, but I like that still a 9:30 sweep that we had presented. Okay, so I see some sort of bearish action from here. Hold. Let me see. Yes. So confused. What did I send you? Oh. Okay. I'm not really bearish off that level yet. Let's see. A lot of consolidation going on here. So I'm not too mad about. So yeah. Okay. Mm-hmm. Okay. Um, this one as well. Let's see. Actually waving up and down there. What's ES saying? Still within below that CRTI. Okay. All right. We're just in and out of that area right now. Now we're just waiting for bearish action out of this break here, of this inversion.
There's a new candle open in 2 minutes, so
Yeah.
if you know that, are you going in or are you staying away for the first few minutes?
I mean, for me, what do you mean, like a new 4-hour candle or?
Yeah, in 1 minute there's a new candle open, so most of the time I look where the wick is going to form and then go in, and not at the minute of switching hour.
I mean, the thing with this one is, I think you guys, you probably have what, 10 o'clock maybe? This one doesn't really switch yet. The 9 hours, probably only gonna have the next 4-hour candle in 3 hours. So I guess the only thing I really look at right now is any common entry signal that I could use. Because like with this, remember, I'm on a window. You have probably 10 o'clock candles, I have 9 o'clock candles, right? So I don't have anyone opening it. So I'm just kind of waiting now.
Oh yeah, I'm not on the one.
Yeah, so that's probably why. But that's actually a good idea to like have that. There's also a reason why even I it also has to do with the market open, but it's also the reason why I don't trade like exactly at 9 o'clock, even though the 9 o'clock candle opens, on the dot 9 o'clock. I only like look at it at 9:30, right? Like 3 minutes after. Mainly because of the market open, but also because a lot of the time there's no real sweeps before that time. So I mean that's what something could apply. We haven't gotten any reaction yet, so I'm still waiting. Yeah. This is super interesting. I don't think I'm gonna enter anything to the upside yet. I don't really know how I'll do that. I don't want to immediately go CIT as well. Let's see. I mean, I'll watch for a few more minutes, but if that high gets validated, I don't really see myself entering anything else or trying to enter any positions. And same.
Are you still bearish?
I'd want to be, but right now that bullish candlestick is not really helping out.
Novo, you stopped out?
No, I didn't get in. I didn't get in yet. Yeah, I was waiting for this to give me some sort of real bearish action out, but then it didn't give me one. So I'm just waiting now.
Now it might get bearish. This is a nice wick on the 5 minutes.
You see a wick on the 5 minute? On
Yeah, just forming for now. If it goes bearish, I
okay.
think we can go in.
Okay. I mean, the only thing I'd see myself, so the only procedure I'll take to get back to being bearish is if price takes out this low, then I'll take this now just a structural point. But then besides that, I'm just kind of just watching what price is gonna do today. Really.
Took all liquidity above, so
Yeah, yeah.
call this Indian, 3 little Indians on the left side.
Is it 3 little Indians?
Or reverse. Yeah.
Oh, okay. What is it, like a candlestick pattern?
Yeah, it's like a 3 on the left side, like up, down, up, down, up, down, and then reverse.
I actually haven't heard of that one. No, but it does sound interesting.
No, it's not taken that high, so. And if you look at the aggression of the candle, it's almost the same. If you look at the 1 hour, it's 3 times aggression up.
I mean, the only bullish setup I would see though is a 159. The 1 o'clock candle, set by the 5, and then 9 AM distributes to the opposing side. That would be the only one. But I really even really pay attention to that. I'm mainly just focusing on the 5 o'clock a lot of the time. But
I trade London up, I trade London down, 24 hour CRT also.
Oh, was Natalie? Was it you or Nat that needed to get the $1,000 for?
Yeah, it was a nice trade.
Yeah, because I'm pretty sure that was because you guys gone. Because I think you guys predetermined that bias way before it happened. We just had to like wait an hour to get it in, but I was like, okay, but they probably made a good amount of that one. Because I think that was like a 1 to 3. And I really ever really go for high RRs, but then that one was just sort of like it was good entry and then also good TP as well because we pretty much just got out at the exact wick before price started reversing in the morning of the next day.
It was perfect. There was change in state and then we get in.
Yeah. I mean, literally, when we had that false break and then the CRT, it's a picture perfect model as well. Like those.
Now it looks better on the 5 minutes.
Yeah, I'm also looking at this candlestick just tapering off the wick. Yeah. Getting closer to what this previous kind of high points. Let's see. Also, S&P has also done a sweep. Okay. It's not my ideal scenario I saw for the morning.
No.
I'm just really curious on. I want to see what price wants to do today. I'm just very curious. Let's see. You know, even on the 1 hour, we're also indecisive as well. Now we have this new bearish opening. So I don't have a suspicion, but I can only confirm it after probably this weekend's. To collect some data on this week, and then I'll see if I can confirm my suspicion.
It's close bearish, we can get in.
I guess the good part is now, I guess that S&P has also swept a high point. So at least now they pretty much aligned. But it's the most I'd see from this. Let's see. You know. Let's see. Oh my days. Oh, bro.
I'm watching for price close to 5 minutes per value gap step, so we can trade. What you're thinking? If it's a 159 at 50 minutes.
Let me take a look here. Probably is. Yeah, there's 3 stick forming here. I want price to come back down here though.
Yeah.
Because honestly, if it does,
159 pattern.
yeah. Let's see what I'll target. I like this. The odds of that. These are very good projections. Let's take a look at S&P too. Let me give it some attention as well. But it's
S&T anti-highs.
these guys. Let's see, we still come back down, which is good. Yeah, I don't know, but it's confusing me in the first half. I'm like, where's it going to? Why is it trying to be bullish? It's 10:15 up. Hopefully we do get something cleaner by 10:30. Okay. Bar close below that low point. It's nearly 10:3.
Would you give your
Okay. So let's just close below, yeah. There we see a lot more potential. Going possibility here. So yeah, let's see. Kind of closure. I think I'll move my stop maybe just to there. Something like that. Okay. And yeah, that's pretty much about it. Really false break. The CRT. 10 o'clock. Let's see about a close. Okay. I mean, definitely price is respecting CRT, yeah. It's kind of weak closure there. But yeah. But you know, I'm probably gonna still keep around the same entry areas. It's just that it got delayed now. But yeah. Okay. Well, there we go. I'm in. That's what price does, yeah. Okay. Pretty late in. Well, it's pretty good, yeah. Alright. as always. Okay, there we go. Going super late there, but it's okay. That's what I'm standing with. We'll see how price plays on with this. But that's the entry for the day, guys. It took a while, but it's also interesting. I'm starting to see a lot of entries at 10:30. I'm not sure why. Maybe daylight savings, but I'm just taking note. As I said, I'm gonna wait for a week to really publicize data. But I'm still gonna be assuming that 9:30 is the main sweep time. 9:30 was a bit more manipulative today. Yeah, we actually got a full candle closure. So yeah, I have no excuse with not entering this trade. CRT, false break. All in all, pretty good. Bias was shade between bullish and bearish. Price was bearish. We followed bearish. Entry 10:3. I'm okay with the time. Actually 10:28, so round number. But yeah, guys, I'm gonna go ahead and get my lunch. I know these streams are getting a lot longer. I'm not used to it also, but gotta wait for price here. Everyone happy? Everyone good?
Thanks, sir.
Thank you, Denise. Thank you, Jeans, Jerry, Odette, Pierre. Enjoy the rest of your day, guys. Okay, so we did reach our CRT low here. At this point, obviously, that is our full TP, but just partially out here. But position just later on. So as you can see, full TP. We had our CRT high, change in state, entry or break block, and then we continued to talk lower. And as always, it was sent out to the Discord right there. There you go, full TP. Here we go. It is market open. And what do we have? We see we have our 9-3 sweep. And we immediately have gotten that reversal, okay? So gonna go ahead and enter our trade over here. And we'll be targeting the opposing side of this range. This is a bit of a late entry, but it's okay. Let me send this to the community. Right here. Okay, but let's see how this trade plays out. Looking for us to reach the opposing side of our range here. Okay, for a quick 1-to-1 trade. Okay, guys. Once again, trade price did move a bit faster than usual, so we're gonna take advantage of that. Once again, just to recap, this is our previous 4-hour candle, high point and low point. We then hop down to our lower time frame. We get our sweep at what time? 9:30. And now we get our entry based off the change in state. Okay, so this kind of close above. This is the kind we're actually entering on. We're actually supposed to enter over here, but it's okay. We'll just take this as a secondary change state for the day. So let's see how this trade plays out. Okay, so we're pushing off the fair value gap. Okay, there you go. TP hit. Okay, let's update this to the Discord. Entry, stop loss, and TP. As you guys can see, trade taken, and it's just about to hit the TP on my broker as well. So I'm gonna let that one play out. Okay, but we reach TP once again, and I think it should have triggered now. As you can see right there, guys, that's the full kiss candlestick. price took the low and went directly back up to the highs. Do this every single morning. And if you don't believe me, you can literally go onto your chart and then just backtest this on the last few days. You can see here, low swept, price came to the highs. And then once again, price came to the lows. They went back up to the highs. And then once again, even the prior day, price came to the high first and then went to the lows. Okay. One candle is what I need. Now, once again, if you guys want the live access to the direct webinar, I will be doing this coming few days on going into depth with this entire strategy, as well as the different ones I use on different type of market conditions. Make sure that you do apply for the webinar, which will be in the link in the description, as well as you will get access to a free strategy order call where I'll look into your system. What are you doing wrong right now? And what can you work to improve to reduce your learning curve and half the time that it takes you to actually reach your profitability. So yeah, this is my changing state, okay? As you can see, price candle close above that high point. And that is my usual entry, okay? This is what I'm saying. This will be my usual entry. Once price close here, that's when I'm into my trade. And then I'm targeting the highs, okay? Stop below that candle that made the break, okay? But as you can see, just out of pure consequence today, I only entered after this kind of closed over here, okay? Right? Okay. Still an okay ratio, talk to the high and low point, okay? That was the very first trade. So as you can see, very fast move here. Very fast move, okay? And actually very fast even for a Friday. Usually Fridays are a lot slower. That's also very surprised by today's volatility. I don't really check if there's any news. Maybe that might be the case. Yeah, just have a look if there's any news, because maybe that's why. Usually Friday is just like it's to end of the weekly candlestick, so there's usually like an end of week just consolidation on Friday. We don't really have this much volatility, but it worked in my favor, so I'm not complaining. I'm not complaining at all. Manufacturing. Okay. Okay. Yeah, I think we're just starting to prep up right now. I was just on prep up. Maybe that's why. But yeah, so as you can see here, we hit the first TP very relatively quick over here, okay? Re-entries, I would have taken it probably from here, this FEG, but then that's pretty much my same entry point, so I don't really re-enter here, okay? Now, you should also see this in the Discord as well. Yeah, that was the first trade. That was at 9:46. So right after the news event Mr. T just mentioned. And then this is the second one, which was exactly at 10 a.m. Okay, when we hopped on. Right over here. Price retraced a bit into this order block, okay? And I've noticed a lot of the time that price usually gives us like one last exhaust after we make the initial sweep, okay? So here's the initial sweep. We reach the opposing side of our range, okay? That's our first trade done, okay? Right? But today was actually a very good coincidence because it was actually able to scale up. Now, if you guys have done your lessons on market cycles, you would know why this was a good re-entry point, okay? So you may actually find the lesson so you guys can watch it after in case you haven't. It is, scroll up here, it's in legacy course. It's in the very beginning. Reversal triggers, enhanced reversal triggers, market structure. What is market cycles? Oh yeah, it is, okay, yeah. Market cycles, okay? You can check it in the WAP or you can just go to the Discord. It should have been on the 7th of January, and then this is where we explain, okay? Right? So all this laid down into it was an impulse, right, into a retracement, and then usually once price has done this, it immediately goes into a brand new impulse, okay? This is what I was anticipating, that we're gonna have this very strong move here, okay? Right? And I literally only kept it, I think, to this high, just above this high, this last pre-market high point, and then I was done. Okay, and you can see this one also as well. It finished within how long? 2 minutes. Yeah, so like literally 9:58, and then 2 minutes it was done. It, like super fast move over here. Okay. So yeah, these are two. Yeah, go ahead. Yeah, yeah. Oh, okay. So the one I use. There's also a video in the legacy course as well where I explain all my. What is going on today? There's so many gaps up and down. Also gapped up here. Um, that's weird. 10, 10 right, okay. Hmm. So what do you mean you couldn't find this? Yeah, that's the one. Yeah, that's the one I use. So you can see here it is as well. This is the original one I have here. See? Yeah, I don't know if that's. I don't want to take. If you want to take a screenshot or um. Okay, cool. Go ahead. Go ahead, bro. Could I have held that longer? Okay, you know I'm not. I'm gonna complain. It's Friday anyway. Yeah, actually, you got it. Okay, perfect. Chris. So to be fully honest with you, that also surprised me as well. I don't usually see this gap. Um, that's why I was actually quite intrigued by it. The only time I see a gap like this is from Sunday to yeah, 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 market open sometimes, but mainly Sunday to Monday open for the new week. Or when it's like FOMC, like a really major news event, then I'll see like maybe a massive gap up. But usually it's just something just a form of candlestick. This is a really weird one because I don't really see Nasdaq do this. Nasdaq usually a very clean chart, especially a Wanda. They're very static data. It's not like if FXEM or NQ where it might just gap up sometimes randomly. But yeah, I'm also quite intrigued by it. I think Pierre though got a better entry than me. I think he did get a better entry. Yeah, he got in at like the peak of the price making that low point. Yeah, this is the most ideal entry that I wanted to get also. But I don't know. I just got in a bit later than usual today. But yeah, also him as well, same trade. Um, I don't know. He's not in the live stream today. Maybe he made his money and he's good. Yeah, well done. No, he's a super guy. Oh, okay. I mean, no, no, it's good. It's good. Literally, what does that do to you now? It gives you tangible experience that you've seen from yourself. It's not just hearing it from me. You put it into, remember we had that conversation where it's a belief system. Um, like having someone else's will imposed onto you, you're not gonna easily accept that unless you see it for yourself, right? So just take it as that, right? So you got the data for yourself, okay, and then you just, I mean, it's been happening this entire week. Like also, what it was the previous day as well, Thursday did the same thing, swept the low, came to the highs, then also reversed back down. Previous day as well, swept the low, went to the highs, high, low, and you just keep on. I mean, you know, there's only so much I can say, but yeah, guys, very very fast. Yeah, you can get this on TradingView. Everything here. Literally once again, let me just re synthesize this. Is yeah, CRT overlay 2 by the timeless one, and then it will pop as the CRT Pro Plus. The one I use for these candlesticks on the side is called TTM HTF candle overlay power of 3 by the Tick Magnet. I don't know if you guys want to take like quick screenshot of this, but remember, there is a video where like I explain all the settings and everything for y'all. Good, 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 good. Mm-hmm. Good. Yeah, no, we're also gonna have the list. We actually implement this for you so that your charts look very similar to mine. But I don't think I'm gonna take any more trades today, guys. Though this might reverse though. Let's see. It might do like a double sweep. Like here's what I confirm is a double sweep where going towards new PM session. So this is like 11:30, 12 p.m. Price has to reverse in the opposing direction again. Um, but yeah, I don't want to get too greedy. It's probably gonna be very early market close today, so I think I'll just take my profits and leave. Really. Yeah, no, definitely. I mean, I think Stephen already explained this to you, but you learn your curriculum, then you go through you get your growth tracker as well. The growth tracker is where we actually take it analyzes all the common mistakes that you would make, and then now since it's not just you journaling, you have like a second pair of eyes. You kind of feel a sense of responsibility, right, to not try and make those same mistakes, and then like we also give you feedback on okay what you could have done right, you know, and that also just like once again helps that belief system, right? Because it's all about to me, it's just literally all about perspective, and everyone sees the market a different way. Um, but then once you come on rectifying them on certain things, they start like saying, okay, you know what? It's not just me looking at my account right now. I have responsibility to other people as well. So I want to actually make the best decision as possible, you know? Um, and then yeah, it becomes like just smooth sailing from there. Okay, guys. But very good stream, guys. Everyone enjoy the rest of your weekend and I'll see you guys next week. Yeah. As you can see, that was cool with the students as well. And we took a second trade as well that also hit TP. So this was 10 a.m. Just a continuation of this. One of the other models we use. And as you can see, that as well ran up to our TPs. Right, yeah. Bit of a late entry, but that's all right. As you guys can see, I already sent out to the Discord. Just like all our trades. It's already sent out. Yeah. So now we'll see what price does. So what are we doing here? 4-hour candle. Low and high points. That's our range. We swept at what time? 9:30. Candle close above. Entered but late. Now targeting just above the range. And we do see pre-market liquidity as well being swept. Equalos here. Taken out as well. Some relative liquidity here, so do get these highs as well, yeah. There's no divergence though, so pretty much the only thing we don't have. Yesterday's trade hit TP. Trade from the other day hit TP. Webinar trade hit TP. So we're pretty good now for the week. Executing the same thing again today. Have no expectations for this trade, whatever it does do, okay. Still a good setup though. Okay, that's the CRT high reached. And that's TP. Made a few $1,000 in what, 30 minutes, less than 30 minutes. Done. Same model from yesterday, from the previous day, from the previous week, from last year. Just executing. Victory of excuses. Okay, market open. Let's see. I do expect to see IT. Okay, so I'm in between a little CIT or CRT because I'm looking at this little very bullish of that previous 4 hour candlestick here, and looking at 930 here with the SMT. Then also above that liquidity lying at the highs here. I haven't seen anything like a good entry yet, but I definitely do see this high getting taken today, especially with how price is moving. We have a little partial liquidation at this low point. Let's see when price wants to reverse back up. Let's see where we are. Now we're just above 50%, yeah. Okay, we're still wicking around. Yeah, recap from yesterday. Good sell off, but no bullish trade, yeah. Yeah, Nasdaq's been pretty stuck, really. Definitely one of the longer ranges I've seen on a pair. Just been trapped in here. I'm seeing a bit of slow moving consolidation here as well in this area. Could have a good sweep going to the downside, yeah. See what price gives us. It's also Friday, so we could see a Friday reversal as well for the weekly candle.
Very strange. I saw this. Very strange.
Okay. I am solidly in those. So Friday brings, either way, good week. Potentially the last trade of the week, yeah. Unless there's something better right after. Yeah, these are some still the same one I was talking to yesterday. Same thing also on S&P. Let's see there, pretty volatile. Okay, apologies about that, guys. I had to go source a few things. Not looking so good here on Nasdaq. This buy. All right. Let's go more for CRT here. Let's see.
Will you in, Fox?
Yeah, I literally entered that. I had to go sort out something real quick. So coming back to drawdowns is not
Oh.
always the best feeling. But
No, but there was news at 5 a.m. So
yeah, I
is
see
it
Joel
10
Star
a.m.?
openings. I'm just actually looking at it right now.
Yeah,
10 a.m.
yeah. So that's why it's moving that way. I wasn't in because of that.
Good job. Let's see here. Hmm.
Let's
Okay,
look more bearish now.
A lot more bearish,
Swept the
exactly.
high.
I might reposition myself over here to be on these lows here. Oh, bearish sweep here. You know, I really thought we actually gonna at least reach these highs. It's unfortunate, but let's see. I'm in a good amount of drawdown. Let's see what Friday has to bring. I mean, bearish change in states would happen from. This is the only recent low point. If I want to go bearish, I'll probably look at ES at breaking this low, and then I could get in a bearish CRT at downside. I'm not too stressed here. But yeah, definitely has been a very interesting week. Been seeing the daylight change a lot of the times. I'm seeing night is not as impactful as was like last week ago, like last week. So I'm also noticing that, journaling all that. Um, and I've seen a lot of my other entries have been at 10:30. In fact, so let's see.
It was before the open, was it took out a high, then the low, but then
Yeah,
rejected
yeah, took
higher
the high then the
again.
low. Yeah, that makes sense.
Yeah,
We at this low on ES.
a double rejection.
We get a close, yeah. Let's get a close. Yeah. Okay, ES might close, yeah, on this break.
If this 5-minute candle close, it's a bullish SMT with ES.
I don't know. I'm liking ES's little bearish close here though.
Yeah, but I mean an SMT with in a candle close. If it's closed like this.
Oh, okay. Yeah, true. Yeah, these lows aren't. They disjointed right now.
Yeah, it's a bullish SMT there. One closed below or wicked below and the other one doesn't.
I mean, it's been those two actually. There's one bullish SMT over here, and then the other one over here as well. Now I have another one printing up. Close. Yeah. That's a green light for ES. I think this is the last I'm taking for the day. Then I'm done. I think that's about it then. I think that's about it. Okay, I'm already knocked out of Nas. My broker actually kicked me out of Nasdaq. So now I'm just looking at ES. Just a base CRT to these lows here. In fact, how far price could go. Maybe there. 1.27. Alright. Okay, 10:20. That's the last intro of the week. Then I'm gonna wrap it up here, guys. Overall though, good week. One no trade day. Good sells, good buys also on Nasdaq. And then yeah. Yeah. Hopefully that's a good. Still maintaining this. I don't like this maintaining this bullish SMT, yeah. But I do like the close on ES. Okay, guys, all good?
Thanks, folks. Have a nice weekend.
All right, guys. Enjoy, everyone. See you guys next week. So it plays out. Now we. And that is the full TP done and dusted.